Oh, what is up, everybody? How's it going? Welcome to Benzinga Live. Spencer Israel here. AB will be joining me shortly. We're in a fast market, ladies and gentlemen. We are in a fast market today. A lot going on. We are giving back like all of those gains from yesterday. Raise your hand if you were not confident in that rally. I haven't been confident in any rally or sell-off. I'm never confident. Oh man. All right. We're going to talk about this. We got to talk about Amazon. Did you guys see the unusual options activity in Amazon yesterday? John Najarian pointed this out. Thank you, Zach. John Najarian pointed this out. There is somebody bought a lot of expensive, or not expensive, a lot of high Amazon calls at a high strike yesterday, expiring this Friday. We'll talk about that a little bit, but it was an interesting trade in light of the stock split. We'll talk about that. What else is on my radar here? I've been like reading up and watching stuff about the London Metals Exchange today, and I have some thoughts on what's happening over there. But if you haven't been following what's happening over in London with the nickel market, basically there is a massive short squeeze, and then they halted the market, and then they announced that they're busting trades. They're busting basically if you participated in the short squeeze and you made money on the upside, they're busting your trade. It's not going to count. And I have some thoughts on that. So we'll talk about that. We'll talk about Amazon. We'll talk about whatever you guys want to talk about. For the first time in God knows how long, I actually have my Fidelity account open, ready to trade if something sticks out to us here. As far as guests, we're going to be joined by Hot Stocks Luke at noon or noon-ish. We'll have ViVi, the Bio Queen, at 12:30. I'm very excited for that because ViVi always comes prepared with picks and new names, which I appreciate. Who else do we have today? 1 o'clock. We're doing our final TradeZero short selling segment today with Dan Pipitone, the CEO of TradeZero, and Steven Johnson. Our last one in the series. If you've not been following, we've been doing this mostly every week for the last few months, doing a little 10 to 15 minute segment about shorting. We're going to talk about shorting high flying stocks today. Shorting rocket ships. When, why not, how. That'll be at 1 o'clock. And then I'm very excited for our guest at 1:15 after the TradeZero guys. We're going to have Sal Gilbertie on the show. Sal is the CEO of Teucrium Trading. If that doesn't ring a bell, just think about this. Sal is the man behind the firm that created the wheat ETF, WEAT, the soybeans ETF, SOYB, the corn ETF, KORN, or CORN. No, KORN. Should probably get that ticker right. And he has seen a massive amount of money flow into his family of funds in the last few weeks. There was probably very few people with who've had as wild a week on the commodity front as Sal, or a few weeks really. So we're going to talk to him all about that at 1:15 or 1:20 today. So very exciting for that. And then we'll have Jesse Kaylor join the show at 1:45 or 1:40 thereabouts to hang out with us for a few minutes. So that's the breakdown for the day. Let's go ahead and get started. Smash that like, and here we go.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasek from Trend Spider. We have
breaking news.
All right, so let me bring up my pro screen right now, and let's just take a quick look at the overall market. Let me bring up my watch list. We got that up on the screen. Yeah, all right. I mean, like I said, I have no confidence in any rallies or any dips for that matter. Nothing is holding. A lot of weakness in tech today. You can see that right off the bat, right? This is just a watch list that I have of all the sector ETFs, the major indexes, and the FANG stocks. And you can clearly see ARKK, growth tech, down 5%. Apple, down almost 4%. Facebook, down 3.5%. XLK, down 3%. Microsoft, 2 2/3%. Tech is where the pain is today. And wouldn't you know it, on a day when the entire market is down, what is in the green? What sector? Energy. Yes, because for whatever reason, energy has become inversely correlated to the overall market. We've seen this every single day for the last 2 weeks. Energy goes up, market goes down. Energy goes down, market goes up. Who's the leader? Who's the laggard? I couldn't tell you, but it's the inverse correlation is clear as day. So let's bring on some charts. Amazon also in the green. Maybe we should go there. That does not tell the whole story though, right? This daily candle, if I zoom in, that does not tell the whole story. This 15-minute tells the whole story. So obviously the news is out. You guys saw the news this morning or last night. Amazon doing a 20-for-1 stock split. So what's going to happen here is as of the close on June 3rd, which is a Friday. So as of that close / the Monday morning, June 6th, Amazon will trade at approximately $150 a share, somewhere thereabouts, right? It's going to be whatever the current price is divided by 150, divided by 20. So that comes out to about 150. That doesn't add anything to Amazon's bottom line as a business, but it does make the stock more attractive for a lot of ancillary reasons, right? Think about what that does. It enables people who frankly can't afford to buy a $3,000 stock to buy it, right? It enables people to, or more people who can't afford to do any option strategies to do some Amazon options, do some covered calls on Amazon, use Amazon options in a way because you can afford to own the stock afterwards. It also, and I've seen this morning a little bit. It also makes it possible, not necessary, but possible that Amazon could be included in an index like the Dow Jones Industrial Average. Like, right, the Dow 30 has 30 stocks in it, and it's price weighted. Right now, it's 30 non-tech stocks mostly, so it's not like this is just pure speculation, but it's a price weighted index, right? Which means that the higher the price, the more weight in the index. Amazon going down to 3 figures, a 3-figure stock price, makes it at least compatible. So I've seen several people out this morning, several market people on Twitter, analysts, reporters, etc., speculating that, and I saw an article about it, speculating that could Amazon be included in the Dow Jones Industrial Average. That would mean a lot of forced buying, right? Because the Dow is one of the most tracked indexes out there in terms of money that's tied to it via index funds. That would mean a lot of forced buying. So a lot of implications here, right, for Amazon. Obviously, they saw what happened to Tesla and Apple and Google. They saw that. And it is a nice, cheap way to get your stock price up. And let's not write that off as a possibility here, because look at Amazon going back the last year and a half, right? Let's go to a weekly. I mean, Amazon was a beast for a decade, hasn't done anything since July 2020, right? Hasn't done anything in a year and 3 quarters, really. So it's a nice trick. It's a nice trick. There's nothing wrong with it. I think people are applauding it because, again, it makes the stock more affordable for a lot of people. So I'm here for it. Sorry, chat. Let me catch up on what y'all are saying. Yeah, exactly, Darren. Exactly. Warren Buffett has long been against stock splits because they do nothing for your bottom line, which is true. They do nothing for your business, but it makes a lot of newer investors or younger investors, it makes it more affordable. Doesn't make it cheaper. There's a difference there, right? We say a stock is cheap or expensive. We're referring to their multiple, the price to earnings, the price to sales. It's not cheaper. It's going to be the same, but it is more affordable, and that's worth something. The other thing I also want to show you guys this options thing. So I actually saw John and Jerry talking about this morning on CNBC at like 5 a.m. But I want to bring up a screenshot if I can of this. Let me credit who this. It was from Jim B2468 on Twitter. Jim B2468. I'm going to share my screen right now. Well, look at this suspicious activity. Okay. So yesterday, I'm going to bring up the screenshot right now. Somebody went out. This is a options activity. Someone went out, and I want to point your attention to the bottom of the picture here. Somebody went out and bought 9,000. Someone or some people. It could be more than one person. 9,000 call options at the $2,900 strike price. And these expire on Friday, like tomorrow. Look at the volume and the open interest at the similar strikes, right? $28.95, no volume there. $28.90, no volume there. $28.85, no volume. But look at all that volume, 9,000 contracts. How much money is that, everyone? How much money do you theoretically have to control to be able to afford 9,000 call options of Amazon? That's 9,000 times 100, right? That's 900,000 shares potentially. Is what you're saying you theoretically can afford? Come on. Now, the irony of all this too is if you can go back to that Amazon chart for today, the irony is it may not even get there. Well, no, that's not true. It's there right now. So never mind. I take that back. Although this morning it didn't look like a guarantee because it was leaking throughout the pre-market session. But anyway, yeah, obviously it's a whale. Obviously, but look at that timing. Come on. Some people call it unusual. Others call it suspicious. I would say both of those things. What are you going to do? SEC knocking on your door. Take a look. It's probably an insider. Maybe. Who can say? Just come on. At least be sneaky about it, right? At least like spread yourself out over a couple of different strikes, or maybe do next Friday. I don't know. Don't do 2 days from now. Not even. It was like a day. It was like a day and change. Don't do a day and change. It's just whatever, man. Come on. I mean, we see it. It's transparent, and I just hope that kind of thing gets looked at. I'm not alleging any crime, but it looks suspicious. Speaking of suspicious, I want to talk about this nickel market right now. Okay. If y'all have not been paying attention, the nickel market, I kind of mentioned this before. There was a short squeeze a few days ago. The London Metals Exchange halted trading. Okay. They halted trading for nickel 2 days ago. Okay. While they work out what was basically a margin call, right? There is these firms, these big firms. I mean, come on. The only people that trade nickel are institutions, right? There's no retail activity trading nickel on the London Metals Exchange. And if it is, it must be a fraction, right? So there's been institutions that got margin called, okay, like a lot of margin calls because the nickel went up like 100% in one day, or 200. I think it was 250% in 2 days, right? Massive short squeeze, okay. So they halt the market while they work things out. Then the CEO comes on Bloomberg today and says, we're actually going to bust all those trades. So everyone that bought nickel, that profited from this short squeeze in nickel, you're out of luck. Those profits are no longer real. We're going to bust your trade. You didn't actually make those trades. I know you did, but we're saying you didn't. Okay. And the reason that the CEO gave, he was on Bloomberg this morning, the reason that the London Metals Exchange CEO gave for why they decided to bust these trades was it put, he didn't come out and say it directly, but he hinted at the fact that they had some big time clients that had serious margin calls and that would have basically ruined them. He didn't come out and say that, but he kind of hinted at it. And that's a little bit messed up. This is what people talk about when they say like markets are rigged. This is what they mean. I want to bring up a tweet. This is also from Twitter here. This is from someone on Twitter. His name is Crazy Viking Macro. And he, I guess, or she, got this email from the London Metals Exchange. And I want to read this email to you right now. It said, I'm reaching out this morning in light of the recent updates from the LME in relation to nickel. The LME have announced they will be scrapping all trades executed on March 8th. Therefore, we will be replicating this decision on. So this is from his brokerage. Therefore, we'll be replicating this decision on client accounts. Yesterday, you closed a $1 mini nickel contract at 557.50. This trade will be scrapped in response to LME's decision. I'm going to skip ahead here. You closed this position yesterday, realizing a profit of about 50,000 pounds. We will be scrapping yesterday's trade by reinstating your position at the closing level. Essentially, this guy made 50,000 pounds and just got it taken away because the LME decided that their big institutional clients that were facing serious margin calls were worth saving in this case, which is absurd, frankly. So this is rigged markets, right? Like I do take issue with some of the dialogue around AMC, GameStop, and who is to blame for what. But obviously, some markets are rigged, and the rules can be bent in favor of the institutions. This is an example of that. So this is BS. I hope someone sues because it would be one thing if they it's in their best interest. It's in the LME's best interest to save their market and keep the market functioning. If that means saving their clients, their big clients, by way of, I don't know, reducing the margin call in some way, shape, or form, reducing margin requirements. I don't know what the rules are around that. That's one thing. But to go out and bust the trades, the people that made money on this is the risk of shorting. When you short anything, your losses can go to infinity. That's the point. Everyone knows it. Okay? To take away their profits from the people that made money off this is just absurd. It is similar to the GameStop AMC thing. It's a little bit different though, because as far as I know, no trades were busted for AMC or GameStop. If you bought GameStop at $10 and it rode it all the way up, you didn't have your trade busted. This is the exchange going in and like busting trades, saying no, this trade didn't happen. What? It's just ridiculous. You agree?
I don't even know what we're talking about.
All right, what's up? You having a busy morning?
Yeah, not a great day so
Not a
far.
great day for Aaron. It's okay. We all have those days. It's just ridiculous, right? We all have those days. Who's having a better day right now? Aaron Bree or the market? They're both having bad days is the answer to that question. So that's just Gregory. Did something happen to you in May 2019? You want to tell us about?
Me?
No, Gregory in the chat says we should negate everything, bust every trade since May 2019. Yeah, the Aesop's. That's a funny name, Aesop's. That's also a problem, right? These institutions are allowed to get like ridiculous margin, and then they can blow up, right? When this kind. Now, granted, it's not logical. What happened to nickel was not logical. Prices don't go up 250% in 2 days in a rational market. That makes no sense. And it's unfortunate. It sucks for whoever is short. That sucks. It's not their fault that it happened, but it happened. Don't just say it didn't happen. It happened. Let's not punish the people that actually made money off this. That's where I stand. I hope some people, I hope the people that are affected sue or something, because it is silly that they would just completely decide, oh yeah, you made money on a short squeeze, but we need to save our big clients' asses, and so we're gonna bust your trade in. That's gonna be that. So that's my spiel. Thank you all for coming to my TED Talk. Aaron Bree, before you hopped on here, we were talking about the overall market.
Okay.
Everything is down today except for oil. Are you shocked?
Amazon.
And Amazon. But Amazon, I think, is down. Oh no, I was gonna say it might be down from the open, but it's not. It's up from the open.
I'm not shocked at all, really. I mean, I made a bunch of money yesterday on Chevron puts when Chevron opened lower. But I said, I was like, I'm not saying I think the downtrend in oil or Chevron or these oil stocks is going to, all of a sudden the uptrend's going to stop. I just thought it was due for a pullback.
Well, here we go.
I mean, I don't know. Was there any bearish? Wait. CPI came out this morning.
Yeah.
Correct?
So there was two things. One, I didn't even realize there was another round of peace talks that went nowhere.
Right.
But CPI, was
in line with,
and it's crazy to say this because like, who the hell is not freaked out about 8% inflation? But 8% was where the market was expecting it to come in, and that's where it came in.
But there was something with
it was
Bitcoin.
Like 7.8%.
There was something with Bitcoin. Bitcoin over.
Bitcoin gave back. We should talk about that. Bitcoin gave back all of its gains from that. You see this chart? Let me bring up this chart.
It's a Bart chart.
Can you bring up your chart, please? I'm the only person today that's having problems, apparently. Everyone else is able to bring up Bitcoin except for me.
Look, this is from our good friends at...
Can you just do it for me? Because this is like the 10th time today.
This is from our good friends at Cointelegraph.
Tried to bring up a Bitcoin chart, and it's not working for me. It's ridiculous.
This is why... Well, it's actually from Dylan Leclerc on Twitter. It's a Bart chart.
Nice.
You see these from time to time, especially in crypto. A big gap up. Some bar coding at the top. That's Bart's hair right there. And then that gap down. And honestly, it looks to me like a technical move. Like, I don't know if there was any news. It sounds like someone's saying there was some news in Japan overnight.
News in Japan?
I don't know.
I didn't even see
said
that.
in the chat. I don't know. Guys, I'm very preoccupied today. Should we talk about it?
If you want to talk about it, we can talk about it.
Yeah, I'm in hot water. I screwed up.
With an article.
I use, let's say, direct inspiration from not like in any reporting or the article, but just in these descriptions of companies that was not good practice.
Which we need to mediate, which we need to fix.
Yeah, which is happening right now.
Situations being handled.
I have no clue. I'm just waiting to hear back if I should show up for work tomorrow or not. I don't know.
Yeah, lesson learned. Attribution is everything. Attribution is everything. Is the bottom line here, I think. So, Where was I going with this conversation? Oh yeah, can you pull up a Bitcoin chart though, like an actual Bitcoin chart?
Yeah.
Because I can't. For whatever reason, I can't. I'm the only person here that their crypto charts are not working for them. So I can look at the price, but I can't look at a chart. Go figure. I want to see that. It gave back all of its gains.
I'm not a buyer of crypto here, really.
I'm not a buyer. I mean, it is a risk asset, but there are times, there are days where Bitcoin does not move in a lockstep.
Right.
With tech.
It's not direct.
But then there are days like today where tech sells off and so does Bitcoin. So what am I supposed to do? Because I'm dollar cost averaging just like you are, I think.
Into
crypto. It's automatic. I don't even think about it. It's automatic. I'm not actively trading crypto. I'm not trying to time the crypto market. I have no freaking clue. So why is it giving back all of yesterday's gains? Yesterday, the Bitcoin went up, crypto went up because
the first thing I did was like look for specific news for why Bitcoin dropped so much, and literally the only thing I could find was the Bart chart. So it's gotta be it.
Great.
I mean, we had the executive order. That was the big news coming for crypto.
I know.
That was seen as bullish.
This is not what you want to see now.
Oh yeah, Enver's got a good point. You're supposed to hodl. Also, shout out Willow Puff in the chat. New member. If you want to become a YouTube member, Spencer will tell you how. You get access to a lot of cool emojis, some special features, and more to come.
Yeah, a lot more to come. You want to use now Willow Puff can use an emoji of Aaron Bree or myself in the chat. What the 10-year popped? Easy Mike, is that okay? I didn't see that. How long is the recession supposed to last? Are we in a recession? I don't think we're in a recession.
No, we're not. Although
the economy is still cooking.
Here,
right?
I did see for the first time some news / data that potentially made me, I'm not going to say bearish, but just made me think a little bit more about what the risks out there could be right now. Let me go ahead and pull this up. This was actually a great Twitter thread.
Okay, you pull that up. While you do that, assuming it'll take you a few seconds, or maybe it won't. I don't know.
I'm ready.
All right, you're ready? Cool. No, to answer your question, whoever asked that about Dogecoin, no, sorry, I don't know anything about Dogecoin. If you want to talk like crypto, like individual coins for real, if you want informed opinions on crypto, I would point you to our Moon or Bust show, our crypto show, which is every Monday and Friday after this show is over. The show ends at 2 p.m. Eastern time. After this show, Monday and Friday, we do a crypto show for an hour. And those guys actually have opinions, informed opinions about cryptos. I just own Bitcoin, Ethereum, and Solana, and that's all I've got. And I'm dollar cost averaging into all three of them. I don't really know anything about anything. What is this?
So this is coming from Dom White. He's a economist in
a what?
I don't know.
An economist? He's an economist.
I was gonna say I don't know.
He's an economist.
I can't think right now, Spencer. All right. He's out in London. He's an economist. Not quite sure what to make of this at this stage. I'm just putting it out there. Thoughts welcome, but there are hints that data that something could be changing in the U.S. labor market. Let's take a note at how he spells labor.
Okay. What are the hints?
Well, we're about to get to it.
Okay.
So Exhibit 1, the hiring plans and job openings indexes in the NFIB, which I'm not sure what that is.
That's just a government survey.
Now looks to have turned quite distinctly. You can see that kind of drop off there at the end. And it's in line with numbers from Indeed, showing the first kind of decline in job postings on Indeed
that's interesting.
Since COVID started. And it's not really, a lot of this data isn't showing that like unemployment's going to spike and hiring's going to drop, but just that maybe the demand for labor right now could be slowing. And I don't know if that's related to everything going on in the war or just fears about interest rates rising. And then, of course, last month when we got the job data from February, it showed that wages had stalled for the first time in a while. So, again, that's not great, but like Dom says here, it's just 1 month of data, far too early to draw any conclusions from. Just struck me as interesting. And I would agree, Dom. I think this is interesting because obviously that's not what we want right now with everything going on. Is hiring to slow, unemployment to rise, whatever. So, like Dom said,
unemployment is tracking. I mean, we're almost back to where we were pre-COVID, which is frankly amazing. Having job openings is not a bad thing, right?
No.
It's not bad.
Well,
Like in this case, for hiring to slow, it would mean that they're filling their jobs, which is good. So normally slower hiring is seen as a bad thing, but in this case, it would be like a net positive for the economy. I would assume, right?
Right.
So because there's all these job openings out there, and so maybe that's a good thing. I don't know if I necessarily subscribe to this, that the belief that this indicates something bad is happening. I want to talk about China here.
You see Baba down?
Does
like
anyone
10%
actually
today.
know? I don't. I have to confess, I don't know. Does anybody know why China is getting smoked today? Here's KWEB. Does anyone know? Is it the new South Korean president? Or did someone say something? Because I honestly have no idea. I couldn't find out this morning either. I was looking for this like 5 hours ago. I couldn't figure it out. Why is China down today? It's getting smoked. Look at KWEB. It's on 8%. Let's go to a daily chart here. That's a new low. Holy crap. Oh my gosh. Is this an all-time low? No, but it's close.
Dude,
It's close. Wait. The all-time low in KWEB. Let's go to a monthly here. Wow. So the all-time low, I guess there was two lows in the same area, right? You've got August of 2015, where the low was $26, and you've got August of 2013, where the low was $25.85. So $25.85 is our all-time low, and we're at $27 right now. This thing was over $100 a year ago. We went from all-time high to basically all-time low in 13 months. That's insane. Is that not crazy? Yeah.
I'm trying to see. Oh, Baba the last few minutes actually getting a nice leg up.
Baba? Luke Jacobi's here, and he wants to come on the show. So the thing is, Aaron and I were both. I need to prepare I need to prepare for a later segment right now. So Luke Jacobi, why don't you pop on over here? Why don't you hop on over and hop into my seat? Easy Mike, I'm so happy I sold as well. Best seller of my life, selling KWEB. Here's what? Luke says he has fuego. I don't even know what that means to have fuego.
Fire.
Luke, come on over here. Don't tell Dad. Don't tell me. He's talking to me as if I can't hear you.
All right, let's give Luke our special intro.
This is Benzinga Live. Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a
breaking news.
All right, producer AB, can my segment on Thursdays not be like long-term investing segment of the week?
Long-term investing.
The stock picking segment.
That's so boring.
Fine.
I'm just
We
kidding.
just need to make it about swing trades.
No, let's do long-term investing today.
All right.
I think that's what
you
a
want
lot
me
of
to dive
people.
in?
That's
All
what.
right, let's get symbols in the chat. We'll talk about swing trades and long-term investing. But let's take a pause on the day trading for a second. Is that fine?
Yeah.
All right. So let's get symbols going in the chat. I'm going to start with one. Okay. Heard me talk about this one before. Ticker FB, Facebook. I am still so convicted that accumulating Facebook down here is a no-brainer. I mean, I think it's like crazy not to accumulate. Is that 1 year daily? No, give me.
I'm
Come
going
on,
to it.
long term, baby.
I'm going to it.
We're talking about accumulation right now.
All right. We're on the 1 year daily.
All right, we're on the 1 year daily with Facebook. All right, stock is down now pretty much exactly 50% off of its highs. Was it overvalued when it was at $320, $380? Maybe. I don't know. I don't think that's like a no-brainer call. But at 190, I'm going to be accumulating more Facebook today. Okay, let's talk about why. Facebook throws off $60 billion a year, $60 billion a year of cash flow. Okay, that's their operating cash that Facebook is throwing off. But just starting there, if we want to talk about flight to safety stocks or like stocks that could get hammered in a market downturn, are we going to be selling stocks that throw off $60 billion a year in cash flow? Let's go back to the catalyst that caused the Facebook sell-off in the first place. It was their Q1 sales guidance. It was worse than investors in the stock market had hoped for, but it was also what will be their second or third best quarter in company history, okay? So was the growth a little bit lower than what we wanted? Yes. Will it still be the second or third best quarter in company history? Yes, it will. Okay, so we're talking about a company that it's not like sales collapse. This is not Peloton that we're talking about, okay? They're both tech stocks. This is not Peloton. We're talking about Facebook throwing off $60 billion of cash. And you know I hate these boring stocks, producer AB.
I know.
But here's where it gets interesting. Let's get into the valuation side of things. We now have Facebook trading at a forward price to sales ratio of 3.4. Okay? That data you're looking at right now, producer AB, updates
forward.
It updates monthly.
Okay.
For one, and it's not forward. So stock's trading at 3.4 times its forward price to sales. What do you think Facebook's forward PE is right now? 13. Good guess, AB.
Oh well, I'm looking at the month-old data. Yeah.
Okay, their forward PE right now is 13. EV to EBITDA, maybe the best metric for us to look at. Okay, EV to EBITDA, enterprise value that's
8.5. I'm guessing.
You're guessing 8.5. All right, so enterprise value divided by the amount of basically operating income that it's throwing off. So it's pulling out taxes, it's pulling out interest, some of those weird things. EV to EBITDA that Facebook is trading at is now 8.
Ooh.
Okay, 8. S&P 500 average. Give it to me, producer AB.
13.
Yeah, it's right around 15.
Ah.
Okay, you have Facebook trading at half of that. And that's why, for that reason, I'm already long Facebook. I'm going to be getting more long Facebook. Am I calling a bottom right now? No. But that's why I started this segment by saying we're going to talk accumulation for a second here. And that's why I wanted to open this up in some of this longer term stock picking.
So how does that work for you in terms of accumulating? Are you dollar cost averaging in like once a month, once a week? Or are you just kind of doing it whenever you see the stock dipping?
Yeah, I'm buying the dips.
You're buying
the dips. I bought a dip, got a nice run. Now I'm buying another dip.
So let's talk with the stock where it's at right now, around 193. Game plan as far as, let's say, if it rips back up to 250, are you trimming? Are you still highly
TBD,
convicted?
right?
TBD.
Always evaluate. Always evaluate. I don't set like some sort of arbitrary price target in my mind when I get into it. That's how you get left holding the bag. I think that when you do that, that's how you get left holding the bag. I think you constantly have to test your thesis. What is my thesis for Facebook? I think that we still have a company that's incredibly performant. That's one side. That's why I'm talking about the $60 billion of cash flow that's throwing off. Then on the other side, I think that you have a highly performant stock that is just gotten smoked on valuation, and it shouldn't have been. That's the part that I think the market has wrong.
And we can look here. So on the bottom of my chart right here, I have the RSI, the Relative Strength Index. For a while, we were below 30. We've since got up. Well, actually, yeah, this is on the daily. Let's check out the RSI on the weekly. Yeah, I mean, on the weekly, we're still way oversold. So I like this, Luke. And I mean, I like this as a kind of like intermediate to long trade. Facebook.
Yeah, load it. Like, this is like, I don't know. I don't want to make crazy statements and say this is like, yeah.
What I'll say for Facebook,
right.
like I'm down to get.
I was about to say something so aggressive, but I'm not going to.
What I was gonna say is I'm down to get into this trade and maybe sell for profit in a couple years when Facebook is trading more at its fair value. Facebook to me is not a stock that I would like put in my Roth IRA and like want to keep forever.
I'm throwing it for a while.
Right. I'm down for a while, not forever.
All right, let's throw it to the crowd. Forever. You guys, everybody has to participate, okay? Spencer Israel only lets me come on once a week, okay? So I want full participation when I'm on here. If you guys like Facebook, what's the price right now? 193, let's call it. If you guys like Facebook right here, throw me the 1. If not, throw me the 2. You have to pick, okay? You don't have to actually make the trade. Let's just get some gut checks on this. If you like Facebook here at 193, drop the 1. If not, drop the 2. I want to see where everybody's at with this one. And can we get an air horn on that, producer AB?
What happened to the air horn? You got a sad horn.
Very nice.
There's no regular air horn on here?
All right, crowd is mixed in here. So let's talk about this. What are some of the other plays then? Throw me some of the other longer ones. And I don't care if you hate Facebook or not. I don't care if I hate Facebook or not. I'm trying to right now accumulate some stocks. Am I still trading stocks? Absolutely. But I started this segment. I said let's do some long-term stuff, and that's why we're talking long-term.
Do you still have your Baba Leaps?
I got more stocks if you want, producer AB.
Do you still have your Baba Leaps?
I still have the Baba Leaps.
I like Baba long-term here. Under 100, give it to me all day long. I know I've been saying this for a while.
Yeah, but so I agree. But I also think that it's a risky play, which is why I did it via Leaps. That's why I didn't buy the stock outright. I didn't trade the stock outright. I bought some really cheap, way out of the money calls that I had like 13 months on or something like that. Do I still have them? Yes. Do they look good? Absolutely not. But will I let them sit? Yes. They were cheap to buy. They're still cheap. I'm not getting any money by closing it. So that's where I'm at with it.
Beautiful. All right, let's
ask this one too.
All right, yeah.
Crowds mixed on Facebook. Did you already talk about Baba today?
No.
All right, Baba. Same thing. Let's participate, okay? Warm the fingers up. You'd hit it long, throw the 1, short, throw the 2, and then everybody's hit the like button.
Yeah, I mean, here's the thing with Baba is you're basically betting. It is risky. I would say it's undoubtedly riskier than a lot of stocks, a lot of American companies that you could buy. But what you're betting on with this is essentially that A, China's going to continue to have a strong economy. B, that they're not going to do anything super radical in terms of taking profits from China's companies. And C, that U.S. and China relations stay positive, or for the most part positive. And China's our biggest trade partner. I mean, I see the potential for, how things could go south. But at the end of the day, like, I'm going to bet on things continuing to be good rather than go into shit and us seeing another global, problem arise. That'd be terrible. So I don't know. I mean, I think it's a no-brainer here under 100, but like Luke said, very much riskier than other stocks.
Okay, here's the other thing that's entered the Baba story recently. Look, all right. One, I'm just going to throw it out. Support for Zelensky. I think that guy's awesome. Do you agree or no?
Zelensky?
Yes, he's like the man.
Yeah.
This is amazing.
I'm him.
It motivates me.
I'm team Zelensky over Putin any day.
Okay. All right. Now let's now that we have that stated, who benefits from all of these sanctions on Russia?
China.
Is it not clear that I think that China is basically going to own Russia once this is all said and done?
Well, it's kind of like China.
Russia's cut out of a lot of it is cut out of the West's banking system. A lot of trade is cut out. Credit card processing is cut out. Who's stepping in to fill that void right now? China. All right. China did come out and condemn some of the civilian casualties, thank God. But China stepping in to fill that void. Chinese economy, I think, is a beneficiary of this, of Russia getting cut out of the rest of the world. So that's a new piece, I think, of the Chinese story that's developed over a couple weeks. And I haven't heard a ton of people talking about it yet. Have you, AB?
Yeah, I've heard kind of like the new, like going forward, the global power position's kind of going to be like Russia and China and then us and everyone else. It seems like however the world is going to look where the U.S. isn't just like the sole global superpower. I think we just have to find how that's going to work. And our position in that.
Yeah, exactly.
'Cause for a while,
look at these
China-
comments in the chat, right? From Darren. China's trying to make Russia the next North Korea, totally dependent on them for everything. Christian Gallagher, China is going to be swimming in oil. It's going to be coming out of their faucets like water. But then we also have a good point from Brian Blockchain. China will delist some stocks trading in America at some point. That's absolutely on the that's definitely on the table as well.
Yeah, and honestly, I mean, that's a great point with China being able to have more power and influence over Russia. I mean, it kind of makes you second guess some of these sanctions and say, do we really want to put Russia in a position where they're only reliant on China?
All right, so let's go back to Facebook. Okay, guys, remember we were talking about Facebook? All right, look at this chart. Remember that my favorite number that I like to cite, EV to EBITDA? I think that's the cleanest measure of profitability. I think it's like the cleanest standard valuation ratio that you can use. Okay, why do I like it better than price to sales? Because like companies like a Facebook and an Alibaba, totally different cost structures, right? Alibaba, they actually have to deliver hard goods. Okay, so that's why price to sales isn't great. PE, why don't I like PE? Stock price over EPS. There's a ton of random shit that gets mixed into EPS, right? There are one-time charges, building a new factory, tax benefits, right? Weird stuff that doesn't actually have to do with the operations of the business. It's not a measure of the health of the business because of all that funky stuff that goes in there. And so for that reason, I like EV to EBITDA. I think that's the cleanest, okay? I just talked about I like Facebook. Forward EV to EBITDA ratio was 8, okay? What do you think the forward EV to EBITDA ratio is for Baba right now, producer AB?
Wait, what do I think Facebook's forward?
Facebook's is 8.
Okay.
We've established that.
Who do I think whose is?
We said S&P 500 is somewhere around 15.
Okay.
What do you think Alibaba's is?
Oh,
we're all in the chat. We're all saying
3.
we'd rather have Facebook over Baba.
3.
9.5. Okay, so if that doesn't make my point, y'all are saying that China's uninvestable, et cetera, et cetera. The fact that Facebook is cheaper than Alibaba right now, if that doesn't sway anybody's opinion that Facebook is, again, I'm not trying to pick a bottom. I'm not saying this happens next month. Well, I'm talking long-term investing. If that doesn't make my case about Facebook's valuation right now, I don't know what will.
That's great. I would have guessed. I mean, I did guess that Baba would have a lower EV to EBITDA than Facebook, but
yeah, of course, right? Wouldn't you?
I would. I just like Facebook. Like to me, it's such a huge red flag that you could see why they started trying to pivot like from Facebook to metaverse, all this, and now and like Zuckerberg and their board has been very vocal about like we're betting a lot on the metaverse being huge, which is like TBD.
It's very TBD.
Very TBD. I mean, I'm not sold on the metaverse being like every day. I mean, people were saying that about the internet.
All right,
too,
so let's say this.
I don't know.
Let's say this. Let's say metaverse drives no incremental revenue into the future, like Marky Zucks thinks it will. You still have a company that throws off $60 billion of cash flow without it.
Yeah, the question then is
right?
how valuable is Instagram and WhatsApp?
Yeah, I mean, again, without massive metaverse revenue, you're still throwing off $60 billion a year of cash flow.
And then what was their big headline recently with the Oculus? They said they were.
I don't know.
I forget. Someone in the chat remind me what the headline was.
I'm not buying Facebook for the metaverse story.
for the headset.
I'll benefit by buying the stock cheap because metaverse stuff is getting washed out, and Facebook is a part of that. I'll take advantage of that piece of it. I asked long-term stocks. PayPal, PYPL was one that I saw fly in there. I also like PayPal, not as much as I like Facebook, but I still like PayPal. Again, EV to EBITDA. Facebook 8, PayPal, guess it. You see PayPal.
19.
Is that 1 year daily candles?
No, this is.
Give me 1 year daily candles, please.
This is block, but let's look at PayPal.
There we go. Thank you, sir. All right.
Ooh.
So Facebook EV to EBITDA 8. Guess
PayPal 19.
15. It's pretty good.
Okay. I don't know. So here's the question. I want to look at the
Nvidia. I see other ones.
Bless you.
Nvidia, Tesla, Microsoft, maybe. But if we're doing long-term stock picking, I still don't have the value. That gives me comfortable that I can set it and forget it for a minute.
How can we invest in TikTok? Tencent? I know it's
no, wasn't it an
ByteDance.
Oracle play?
Oracle tried to buy it, but I don't think they did.
I don't know. That's a Spencer Israel question.
I love Nvidia.
Patrick Starr, AB gonna be homeless in the metaverse.
Probably.
I'll be homeless with
Patrick
you.
Starr.
I'll be homeless with you.
Patrick Starr roasted me yesterday. You know what he said?
What?
We were talking about Black Swan events and how many we've had, and we went from COVID to now the war. And Patrick Starr said the next Black Swan event was me getting a girlfriend.
Okay, that's funny.
Yeah, it's kind of mean.
All right, so I just ran through a ton of symbols. Again, my big rant today was on Facebook. Baba, PayPal, I still think in play if we're doing our long terms. I see a lot of the auto symbols flying in. Don't love any of them right now, either from the long term side or from the swing side. That said, I think autos are always tough from the long term side, right? You have Tesla, right? We're talking 5-year time horizon here. Of course, that's been a bigger winner than any of us would have imagined. Outside of that, all the autos from a long-term side, look back, they're tough.
I think short-term oil prices are going to remain high, and as a result, a lot of these, your Chevrons, you name it, will benefit from these high oil prices. I do think now Chevron is very overextended. You can see here on the daily RSI, Chevron's RSI is above 80 right now. I mean, you have to go back so far to find a comparable RSI. Well, actually, only back about a year.
I'm there with you,
but
I'm hanging long and strong USO. I'm up 22% on USO right now. I'm also sitting long and strong GLD. I'm plus 12% on GLD right now. For ETF moves, those are some decent moves. Obviously, we know what's happened with those commodity prices. But I'm hanging out for the time being. We'll see what we decide to do.
Yeah. So
I'm actually up 15%.
Shout out Jameson, Trading Nomadic in the chat, because he kind of read my mind where I was going with that. I think it's more clear now than ever, Luke, that not only here in the U.S. but globally around the world, we should be considering how we can become more energy independent. And I think solar, I think uranium, I think nuclear to me is like the no-brainer. Like, why should we not build some new nuclear?
I always think the same thing.
And it's like, to me, it's a no-brainer. And more and more people are seeming to be more willing to consider nuclear as a legitimate power source right now. But you can see it's reflected in the chart. I mean, uranium's had a nice run this chart. URA, the global uranium ETF, has had a nice run up from 20 to 26. So that's more, than a 25% increase over the past month or so. And we haven't really gotten anything in terms of like actual hard news that politicians are now bringing bills for new nuclear plants or anything, but the buzz is all around it. The buzz is there, and same with solar. Same with
I just don't know the names for nuclear. I know the names for oil.
There aren't a lot.
I know a lot of the mining names. I don't really know what is the one like UUA or something? No, UUUU.
Yeah, energy fuels. Look, this one's run. Went from $6 to $9.
Wait, can you what candles are these? Dailies?
These are dailies.
Can you get monthlies?
Yes, sir. And here's the it's a U chart on the U chart. Here's the cool thing about Benzinga Pro. We can go right here, Luke, and scroll down and go to peers, which it looks like that UU doesn't have it.
Wait, leave this chart up and give me the 5-year, if you don't mind. I like this dark background. It's easier for me to see. I'm sitting far away. This stock always has the craziest runs.
These are monthly candles?
Yeah, these are monthly candles. Like, go back. Like, go further in history. Like, see, this stock has crazy runs. Always. Like, every year. There's some time where it doubles and collapses. Pretty much once a year, you can count on it.
All right, so we know what's coming next.
Just telling you, UUU is a weird stock.
You know what's coming next. What are your guys' thoughts?
Like, 4 U's.
UUU's never... Oh, shout out Jonathan giving us DNN. Let's check that one out. Another uranium play. Yep, uranium exploration. Yeah, I mean, I don't know. I think short term, like I said, oil stays high. These oil stocks benefit from that. But long term, I'm all about other energy sources. And let's look at NVIDIA real quick, Luke, because I think this might be as close as you have to if we're talking.
Okay, wait. This is sort of funny. I'm just like doing some scanning on my brokerage right now. What symbol do you think I've made more money on this year than any other symbol?
GME.
Nope.
AMC.
This year, baby. 2022.
Ford.
The GLD.
Oh, really?
Yeah, that's sort of funny.
But see, that's the thing is it's gold's been performing well, but it's not like you have a crazy move this year. Oh, actually, that's pretty crazy for gold.
Yeah, no, it's a crazy move.
170 to 186. But still, percentage-wise, what is that?
And I mean, I have a fairly large position in it too, because it doesn't move like crazy.
It's it's relatively a crazy move for gold, but percentage-wise, I mean, that's like a.
I know. But that's why I can afford to load up a big position on it. Right.
Yeah, I'm not a buyer of gold here. I just always think there's better investment opportunities than gold.
Yeah, I don't know.
It's safe.
Not always. I always keep gold. Let's talk about portfolio construction if we're doing long term today. So way that I construct my portfolio. We're going 70-ish% ETFs, then we're going 30% for individual stock picking and swing trading. Okay, so you know, GLD, it's a fairly large position, right? We're somewhere between 500 and 1,000 shares of GLD right now. When did I load up on it? I loaded up on it when market started getting choppy. Market starts getting a little bit less choppy. I will still keep GLD in the long-term portfolio, but I'll start to trim it back a little bit. Maybe we hold 100 shares of GLD.
This is interesting. I don't remember gold getting this high in August of 2020. It got all the way up to 1. It's basically where it's at now. You can see this kind of U-shaped pattern.
Yep.
But I did mention NVIDIA real quick.
And like Young Money 22, gold's a no-brainer in an unstable market. You know, that's where I'm at. Again, long-term portfolio. I pretty much always own some gold. The question is, do I own 100 shares or 500 shares? And that's what I'll flex up and down.
Yeah. At the end of the day, stocks are, you know, they're inherently risky. They're risk assets. They're not. You know, gold is not in the same category. So if you're looking for something safer, gold is always going to be more of a safe flight than stocks. But to me, Luke, if we're talking about long-term investments, if you had to give me one stock right now that I had to buy today and I couldn't sell for 10 years, well, Apple would be very high on that list. Apple, Microsoft, Amazon. But NVIDIA, to me, is like as close as there is to a long-term no-brainer. Honestly, I think the biggest risk right now with NVIDIA is if something happens with China and Taiwan. Otherwise, everything NVIDIA produces, they're going to sell. So everything needs semiconductors, whether it's cars, whether it's computers, crypto mining, gaming, AI, self-driving. You name it, NVIDIA has its hands in terms of transformative technology. And it's a strong company.
Yeah.
It's expensive still, but I think
like sales are up 50% year over year. That's not normal. That's monstrous, of course.
Yeah, and you could, you know, once the supply chain issues like fix some of this, maybe, you know, maybe the demand for semiconductors begin to fall. But here's the thing with looking at these metrics, Luke, like the PE, price to sales. If you were looking at these for Amazon or whatever in 2010, you would think like,
I agree. That's why I'm like that's why I'm not calling you crazy. You know what I mean?
Right. I appreciate it.
You're welcome.
Because it'd be very easy to look at these numbers and say this stock's still way too expensive. There are cheaper stocks out there. And basically my point was you could have always said that about Amazon, Apple, all these stocks that have been the best performers. You could have always said, oh, there are cheaper stocks out there.
Yeah. Yes. Exactly. That's why I'm not being a hater. Not a hater.
What's your answer to that question. If I gun to your head, which I would never do that to you, Luke, but you had to buy one stock today and hold it for 10 years.
I already told you.
Facebook?
Yeah, I'm doing it. I'm doing it. That's the truth.
Facebook. When is Facebook's ticker actually going to change to Meta? That's going to throw me off because I'm so used to just searching for Facebook.
Yeah. Let's do this one for a second. Let's gut check one more, can we?
Yes, sir.
All right. And I see Spencer Israel is about ready to hop back on. But give me ticker TSM. TSM, you know this one, producer AB?
Taiwan Semiconductor. Yep, this is...
All right, let's do 1 year daily candles. This is a vote, okay? I'm on my last 2 minutes of the week. I'll recap the ones that we talked about in a second here. Last 2 minutes of the week. Let's just do like a little bit of fun speculation. I have no position in this one, no dog in this fight. Taiwan Semiconductor. Obviously, stocks sold off when we had Russia invade Ukraine. A lot of speculation. Is China going to be doing the same thing to Taiwan? Obviously, that disrupts Taiwan Semiconductor if that happens. But the stock didn't sell off that much. It's down, right? There's no doubt about that. But we're talking about, let's say, a move from 120, 125 to 103. All right, 15-ish%, let's call it. I think it's unlikely that China does anything in Taiwan. They are looking at what the world did to Russia with sanctions, trade policy, etc. I don't think you can apply that same caliber to China. But if you had to pick this one right here, 103 TSM, you had to pick it long or short. One if you'd pick it long, two if you'd pick it short. Which way would you throw it? I'm curious where everybody's at in that. And why don't you start us off, producer AB?
I'm long. In fact, I'm looking at the option chain right now to look at some calls.
Yeah, and I'm like with Zen Bullish in the chat. He's saying TSM too dangerous where it's located. Rather own Nvidia, AMD, USA, 100% the same way. That's why I'm saying I have no position in this one way or another. But I'm just like, it's like a fun little final speculation item.
Wait, Nvidia produces a lot of its chips in Taiwan too, right? Or they get their chips from Taiwan Semi?
I don't know.
Nvidia has exposure to Taiwan, 100%. I don't know the extent of it or exactly how that works, but yeah, I'm with you, Luke. I don't think anything's gonna happen with. I hope not with China. Why would Taiwan Semi have $610 billion worth of debt if they've got $1 trillion worth of cash? Like, why wouldn't they pay more of that debt off?
It's cheap.
It's cheap.
Yeah, that is so cheap right now. I have no issue with that.
With that debt ratio? No, I don't either.
I
figure there's a good explanation for why a company would carry.
That's like a mortgage right now.
Like, even if you have the money,
you can get a mortgage for 3%, or you can buy a house in cash. What are you going to do? You can get a mortgage for 3%.
Yeah, then
spread it out over 30 years.
Use the cash to get more than 3% return a year, and then it's a free.
I don't blame anybody for carrying debt right now.
So it's
especially companies that have some nice cash flow.
That's a great explanation. Just like a mortgage, a company may want to hold debt even if they have the cash on hand to pay all that off because it just makes economic sense to do so.
Yeah, exactly. Why do you have a personal loan to buy stocks?
I would never do that.
Spencer Israel's eyes just got the size of golf balls. Wait, we haven't talked about that yet?
I don't know.
Okay.
Let's see how Upstart's...
Definitely thought that one was out there.
Let's see how Upstart's doing. Upstart's down to 108. I don't know. I mean, all these growth... I mean, all these charts look exactly the same, right? Look, we're looking at Upstart's year chart right here. Pull up Roku. Like, they've all just gotten so beaten up. Man, Asana. That guy, Dustin Moskovitz, has had to have lost a lot of money today. He's bought more than $1 billion worth of stock over the last year. Down 25% today. That's $250 million.
Wait. Did you guys talk about the DraftKings thing?
Not yet, unless Spencer did.
Did you yesterday, Spencer? Oh, Spencer misses all the good segments. Can we do it a day late, Spencer? Since you missed it? Okay. Go on Google. Are you on? Search DraftKings CEO Twitter.
Oh yeah, this was great.
You see this?
Yeah.
You gotta reshare your screen.
Well, I don't know. I saw the tweet that was talking about it. So James Robbins, the CEO of Twitter, said, if you sold DraftKings today, just be aware that my team and I are on a mission to make you regret that decision more than any decision you've ever made in your life.
Okay.
Meanwhile,
you sold DraftKings.
Yep. Unusual Whales has it right here. I saw a different tweet that laid it out that showed his 13F filing next to it. But Unusual Whales has it right here. But according to your own trading plan filed with the SEC, you have sold 2.3 million DraftKings shares, around $115 million worth, since May 2021, and have sold 1.8 million shares following the IPO. So, yeah, basically he's calling out people that have sold his stock. Meanwhile, he's selling his stock.
Yep.
But
pretty funny.
With
Come
that
on.
said, he's still holding it. Probably.
Yeah, I know. He's still holding it. He still owns a ton of it.
I wonder if Portnoy sold any Penn stock. Let's see. Will Wisdom, Dave Portnoy. All right. Last time we're going to ask the chat, give us your one stock you have to own for 10 years. We're talking long-term investing. Oh, shout out Khaled in the chat. If you guys want to see a really cheap semiconductor stock, check out HIMX. The stats will blow your mind in terms of PE growth and then the price. Let me pull that up on my good friend, Benzinga Pro. And that's really the best way to get our attention, the super chats. So HIMX, we're looking at price to sales of, 1.2 PE of 4. See, to me, when I see this, Luke, like something's got to be, like there's got to be a reason this is so out of favor. You agree?
Yes.
So I haven't done too much research in this, but that's why you just got to learn when to use these metrics and when they can be not misleading, but when they should matter more than other times. And when you're looking at a company like Facebook that's that big, right, it means a little bit more to me to see an impressive EV to EBITDA ratio.
All right, Spencer. You ready? All right, producer AB. My time is coming to an end.
All right, guys.
I'm tapping in Spency.
Smash the like for Mr. Jacobi. We got to get him on more. The only way to do that is to show him that you love the segment. So smash the like, leave him a comment. Mr. Jacobi, I hope you have a great rest of your day. Oh, man. All right, that was fun. Always good to get Luke on the show.
Not sure why you're wearing your headphones, man. There's no one here. Just me.
Because Luke put them on, and I didn't want Luke to feel like he was the only one wearing the headphones, so I put them on because I'm a good friend.
All right.
But
All right. Cool.
I'll take them off for you, Spencer.
Just do what the other kids do. That's fine. If I put on my headphones and jumped off a bridge, would you put your headphones on and jump off a bridge?
I don't know. I mean, how high is the bridge? Like, is it a
don't know.
safe landing zone? Zen is asking if you and Luke had a falling out. Do we not want to talk about that?
What? No. What? No, Luke, did we have a falling out that I don't know? He's nodding his
It's
head.
because Luke didn't get the invite to Spencer's wedding yet.
What? No, this is not false information. Luke and I had no such thing. Luke, show the people that we're good. Come. All right. Okay. See that? Oh no. Okay. That's good. That's good, Luke.
Man, that's
good.
That's mean.
All right. What was I gonna say? Oh yeah, while I was out just there, I realized I neglected to mention when I brought up the Chinese stocks that are all trading down. I knew that JD reported earnings. I forgot though in the moment. I assumed JD's report's weighing on China today, but I kind of thought that China was down before the report came out, which is why I wasn't sure.
What was JD's report? Oh, the earnings report?
Yeah.
Okay.
Yeah, JD had earnings this morning. You guys talked about Asana, right?
Yeah, my homie Dustin, your cousin.
My cousin Dustin.
Not having a great day today.
You guys know that?
assume, I actually don't know how much his holdings worth. I know he's bought like cash wise more than $1 billion worth of stock, but let's say it's worth around that because some of what he bought was at a lower price point than what Asana was worth yesterday. A lot of it was worth a higher price point. Let's say he's still got worth something about $1 billion. 25%, that's $250 million.
Hmm?
Man, I know what it's like to make a bad trade and lose some money, but I couldn't imagine losing $250 million.
Oh, wait, hold on, though. Asana's down. What is it down today? Yeah, okay, 25%. Yeah, it's up from the open, though. You're green from the open, if that's your thing. Also, what I was going to say on the DraftKings thing is the CEO specifically said if you sold DraftKings today, or was it yesterday?
It was yesterday, but he
Yesterday.
said today, I think.
No, the exact words, I think, yeah, it was. I think it was the exact words were yesterday in the tweet.
Oh, I was saying I think
He only specified if you sold it on a specific day.
No, he said if you sold today. But
Okay,
the tweet was yesterday.
if
So
he-
no,
he-
it was actually 2 days ago.
He was referring to specifically to Tuesday. So if you sold it yesterday or Monday or last week, you're fine. You're golden. Just the poor schmucks that sold on Tuesday are the ones that are in trouble here.
I also will
The rest
say,
of y'all are good.
like, to me, there are just some like optical red flags, like to me, like things that look bad for a
That
company. Yeah, if you're a
like that.
CEO, to me, if you're a CEO, you shouldn't, stock price should be the last thing on your radar, right? You're worried about,
I know. It's a
uh,
red flag.
yes, getting return for your investors, 100%, but not. You understand that people selling your stock and buying your stock is just part of the process. It's your job to run a strong company that people want to buy more than they want to sell.
Yep.
You shouldn't be freaking worried about the stock price. Anytime you have a CEO tweeting about their stock price, it's a red flag.
Jeff Bezos kind of set the bar for this. He gave that famous interview. And by the way, guys, ViVi had to reschedule. She had something come up, so Vivi's going to come on the show tomorrow at 11:45.
Does Jesse have the links?
I didn't send them to him.
I'll send Jesse
Okay.
the links.
Jeff Bezos kind of set the standard. He gave that famous interview like in the late 90s where he said internet. He was asked like, is your company an internet company? Right. And the implication there was like the word internet comes with a certain valuation at the time. Right. Is it an internet company? Should the market value your company as an internet company? And he said, internet, schminternet. He didn't care, right? He doesn't like value it however you're going to value it. I'm here to build a business. And that worked out for him and everyone else that bought and held Amazon for the last decade. So, okay, I mentioned the ViVi thing. What else did I want to say? Did you guys cover CrowdStrike? Because that's the other. Oh, actually, no, I don't want to cover CrowdStrike. I want to cover Zscaler. Because I was going through the most searched tickers on Benzinga Pro today, and Zscaler is randomly up there.
I don't know what that is.
SPY is your most searched ticker today. Tesla is up there, and then Zscaler, ZS, very randomly. I don't know if I've ever seen Zscaler.
I don't even know. How do I not know what this company is? It's a $30 billion company. Oh, it's a security play.
I can't speak to what you know and don't know. But why is Zscaler the third most searched ticker on Benzinga Pro today?
cybersecurity play.
Yeah, it's down 2%. Is there a reason why? Am I missing something here?
What about now? Service Now, ticker NOW.
By the way, I was looking this morning. I don't do this very often. I was looking at my main Fidelity account, and the position that I am up the most in on a percentage basis is my cybersecurity ETF. I'm up more on a percent basis in that as I just got logged out.
That reminds me, I got to check my brokerage today because I do still hold some shares of Asana. I had trimmed my position at like 70. We're about like half of that now.
I'm up.
Oh, wow. Yeah,
I'm up 73% in my CIBR. It's my best performing holding on a percent basis by a kind of a lot, honestly. Kind of a lot. I bought the NASDAQ one, right? The CIBR, the First Trust NASDAQ ETF. My cost basis is, what's my cost basis? 28.22 is It's my cost basis.
So here's what's dragging down my long-term investing account today.
Yeah.
Got Asana with down 28.86%.
Not great.
That's the total amount it's down. It's down 25% today. Baba down 9%, which I added a couple Baba shares. Literally, when I say a couple, I mean 2. So it was about a $200 investment like a week ago when the stock was at $100. So I'm down about 10% on that.
Okay.
Not a big position for me in this portfolio. Apple down about 4% today.
Okay.
DocuSign
down
about 5% today.
Getting crushed.
Neo.
Oh gosh.
Down 14%
Good
today.
day. Good day yesterday. But they did list their shares on the Hong Kong exchange officially. They IPO'd in Hong Kong today. It's not really, I guess it is a dilutive event to some extent, but they're giving back yesterday's gains.
Yeah, my unit cost on Neo is above 50. So
pull up that Neo chart there. Oh boy. This is a weekly. Let's go to a daily.
But this is my long-term account, baby. I mean, Neo's story's not over yet. Nvidia.
Neo's the one. Nvidia.
Down 4% today. Wow. At one point, my entire Nvidia position was up more than 100% in my portfolio. It's currently up only 20%. Wow. And I bought it pre-split.
You guys were talking before about Nvidia and Taiwan Semi, and I'm also not an expert, but here's a question and this just occurred to me this morning. So you guys know how the world is basically exiting Russia, right? Every company more or less.
So I've been told.
So you've been told. So I've been told. So we've been told. And as such, every company that has Russian exposure is trying to either freeze their operations there or divest themselves of their exposure with regards to Russia. Is this same thing going to happen one day to China, do we think? Because there are way more companies in the U.S. that are married to China in some way, shape, or form. Like I was thinking about Disney. Disney's in my never sell portfolio. But man, are they ever exposed to China, or are they exposed to China? Because that's like a huge market for movies. And they've bent over backwards through the years to placate China in a lot of ways for their movies. So is it ever going to happen where you don't think you don't think we have to worry about companies doing the same dance that they're doing with Russia now, but doing it with China?
You would have to. That would.
It'd be bad.
That would wreak such havoc on on the U.S. economy.
It'd be so bad
that even U.S. stocks, if that happens, right, are exposed.
I know.
Like at this point, it's not which companies are exposed to our trade relationship with China. It's just our whole economy is.
No, I know,
literally
I
whole
know that.
economy is.
I know that. That's what I'm saying. It would be bad. So do we need? Yeah, sold up. I'm thinking a lot about that too. Right. A lot of companies are in bed with China because it's good for business. If we ever get to a point though where that business is not worth, maybe like relations deteriorate from here on out. I mean, Mountain Tactical, that's funny. But in all seriousness, like, what if this happens? Like, it will wreak havoc on U.S. markets, but it'll wreak more havoc on the companies with direct exposure to China. And that's a lot of them, right?
I agree, which is why I'm saying that why not bet on the China stocks, because knowing that if shit goes south with China in terms of our trade partnership, even U.S. stocks are getting crushed. So we got to be bullish that that's not going to happen. Otherwise, our whole economy is going to. I mean, that was one of the big worries when the stock market drew down in 2018. Was that trade talks with China were worsening, or there was some deal with China?
I'm worried though, and because I don't really have a good feel for. I don't think anyone probably has a good feel for how exposed they are to China. We're all exposed to China because the whole market is, and we're kind of tied together like that. But I was looking at the companies that I've got. I don't own that many individual stocks, right? You guys know that I own Disney, I own Airbnb, I own some cannabis stocks, I own Formula One, Callaway Golf. And I was looking, I was like, gee, like crap. Like if this were to ever happen, it would probably behoove me to have a good idea at least of like how much business does Airbnb get from China? Is Airbnb even in China? I know Disney's obviously huge there. What percent of their revenue comes from China? I should look into that. It would probably behoove all of us to look into that, just so you know, just to have the idea in our heads. If shit ever hits the fan over there, like, what are you going to sell first? You're going to sell your business. You're going to sell your stock that gets 2% of the revenue from China, or your stock that gets a third of the revenue from China, right?
I agree. Someone in the chat was bringing up the NBA thing where Maury, the Rockets guy, criticized and the NBA took, and that's the thing. I mean, these companies don't have an allegiance other than to their bottom line.
I know.
They will do it's not, oh, we're going to do what's best for the United States. We're going to do what's best for the country. We're going to do what's best for our bottom line. Here's the most grotesque example of that. John Cena apologizes for saying Taiwan is a country. He had to apologize for saying a country is a country.
Dude, I used to live in Taiwan. Did you know that?
I mean, I think Taiwan's a country, right?
As a former resident, I can attest it is a country.
Okay, so why would someone have to apologize for saying it's a country?
John Cena. That's a good one, Joe Schrader. That's funny. Yeah. Again, do I want to think about this? Not really.
I also
does it give me pleasure to envision like the market crashing because we're cutting ties with China, hypothetically speaking?
To me, it's so
I don't enjoy that.
It's so maybe not hypocritical is the right word, but to me, it's just useless to have all this like anti-China rhetoric while we're the biggest trade partner with. It's like you can't have both. You can't be super hawkish this country and what they're doing, and then in turn be their biggest trade partner. I know. I just don't think we're prepared, both as citizens or as a country.
We're probably not
to make a moral stance and say, "Oh, we're not going to do business with China anymore," and see the effects that takes on the economy.
And as we've seen, it's not easy to flip a switch and just say, "Okay, Russia."
And those were all
Russia. You're cut off.
Those were all decisions made in the past by leaders to say, "Oh yeah, it's cheaper to produce over there. Oh, it's cheaper to make this over there and bring these manufacturing jobs here and use." Effectively slave labor than to like pay Americans fair wages. Those are all decisions made by companies and made by politicians to allow those companies to do that.
Yes.
And that's what deregulation at the end of the day allows to happen. I mean, I know it's always, regulation's bad for business, whatever, but this is the flip side to that. This is the flip side to having no regulation. What happens? Companies will do what's best for them. They'll do what's cheapest for them.
Yes.
And raise their bottom lines and leave us behind.
Is this the shareholders' fault? If the shareholders weren't so demanding, I'm joking, or am I?
No, but
I'm half joking.
But you could make the argument that if so and so shareholders stood up and said we don't want to do business over here and we'll take the hit on us, but who's doing that? Who's willing to say?
The Larry Fink from BlackRock apparently.
He's doing what?
Well, he's all in on the ESG train. So he thinks companies need to be more sustainable. So
isn't he? He's former. No, or he is the CEO of BlackRock.
Yeah.
Okay.
Yeah.
He was with part of the like the Disney Air. They had this whole letter to politicians saying we need.
That was
more oversight.
Yeah, a couple years ago.
Yeah, that was Larry.
What was I gonna? I was gonna wrap this up with a point. My point in bringing this up was not to like scare anyone into selling their stocks. It's just to be like, all right, now we know that it at least it's possible. It's possible to just over the course of a couple of days or a couple of weeks, cut business ties with a country. We're doing it. It's happening with Russia. So that is on the table now, here on out. I hope it doesn't happen with China. It would be bad for probably our economy and in a lot of ways, but at least it's on the table. That's why I brought that up. I wasn't trying to say it's going to happen or anything like that. There's a few other things I wanted to get to before we're going to bring on the TradeZero guys at 1:00. And that's one of them. I just blanked on it, but I remembered. I got a notification a few minutes ago, a notification from the New York Times. The TSA will extend its mask mandate on airplanes and public transit through at least April 18th. as
No.
as the CDC reviews the policy. I gotta say that sucks, because there is not a single state in the country right now in the U.S. with a mask mandate. Hawaii was the last state, and it's over. So now no states.
I can't tell if AT was signaling like it's not that big of a deal, or
So no states have mask mandates now. All right, Aaron Thomas is saying wear a mask on the plane. Yeah, well, that's the rules. Wear it or get thrown off the plane. But can we just? What's with the inconsistency
I
in the
thought
rules
everything we were getting from like the CDC and stuff with like, oh, most Americans are in a position where that those mandates would be. I would have guessed that by like April we would have been no masks on planes.
Well, it's just inconsistency with the rules. Like the states got rid of their mandate, but I guess the airplanes are small containers. I don't know.
I'm not saying I think it's the dumbest thing in the world.
I should add that
I'm surprised, honestly, from a political standpoint. I think they know how popular it is to like repeal these things, that they wouldn't want to do that.
Yeah, we should add also that according to that alert just now, the mask mandate on airplanes and public transit extends as of now through April 18th. You know what's not through April? You know what's not before April 18th? The Benzinga Cannabis Capital Conference, and we have some breaking news to announce about that. As of this morning, I think it's safe to say this now because Jason already said it. As of this morning, Mike Tyson is confirmed to be attending the Benzinga Cannabis Capital Conference April 20th and 21st in Miami Beach, Florida. How freaking ridiculous is that? Mike Tyson.
Got some big star power coming.
I mean, say no more. I also got word, although I didn't hear it entirely, that we are raising the prices of our tickets starting, I think, next week. So if you want to go, I recommend you look into buying your ticket this week. The link is bzcannabis.com. There's a discount code that is both on the screen and in the chat. Wait, it's not on the screen, but it is in the description. And the code, I don't know why it's not on the screen now. The code is SHOWS30 is your discount code. You get a 30% off your ticket to the Benzinga Cannabis Capital Conference. bzcannabis.com is your link to buy your ticket.
Oh, this reminds me.
And hang out with Mike Tyson.
Since you did a call out, I have to do a call out.
Okay.
I'm working on a story about Benzinga Pro users who have used the platform to make a winning trade. So if you're a Benzinga Pro user and you have a story of maybe you saw a headline, or you were just using the scanner and you found a stock and you bought the stock and it went up, and reach out to me.
How do they do that?
Email us at shows@benzinga.com. Just put Benzinga Pro or something in the subject line. I don't know what you're talking about. If you have any questions, you can let me know. If you don't have Benzinga Pro and you want to know more about it, you want to try it out, go to pro.benzinga.com. I'll drop that link in the chat and you can sign up for a free 2-week trial. No credit card needed at all. Pretty much every time you see me pull up a chart or look at data, whether it's a company's PE or short float, no matter what it is on this show, I'm using Benzinga Pro. So yeah, I hope we've got some Benzinga Pro users listening.
You didn't mention the discount code we're offering for that as well.
Yeah, well, that's where I thought you were going to come in, Spencer.
Sure. 25% off. Link in the chat. 25% off Benzinga Pro. There it is. And no, who asked? Josh B. No, the ticket does not come with free weed.
Well,
although
there may be some samples.
I can't promise you that there won't be samples based on prior years. I don't think I'm allowed to say that there will be samples. But in prior years, there have been some samples. That's all I'll say about that. So check it out. All right, it's 1:00. We are going to bring on our next guest here in a couple minutes, Steven Johnson, who is a trader, and Dan Pipitone, who is the CEO of TradeZero, for our final short selling with TradeZero segment. If you've not been paying attention, we've been doing this recurring segment for the last few months where I bring on Steven, I bring on Dan, and we talk about short selling from a trader's perspective, because that's what Steven is, and from the broker's perspective, because that's what Dan does. He's the CEO of TradeZero. And so today is going to be, for the moment at least, the last segment that we do, though I would love to do more with them down the line. And I've got some clips queued up, ready to play, but we are going to talk about shorting rocket ships. I know Steven was getting down and dirty, or at least I think he was, in INDO. You guys know INDO. You know that stock. The one that's been ripping.
Indonesia Energy?
That's the one. We've talked about it.
Well, we had a guest on that gave it to us at $5.
Yeah, but that was like months ago.
No, it wasn't. Stock Market Wolf? He was on like two weeks ago, probably.
Was it really?
Yeah.
Ah, crap. Why do I never listen to our guests? That's why.
Oh, shoot. Duke's losing to Syracuse right now. God damn it, Christian Gallagher. Now you're making me want to watch basketball.
No, focus.
All right.
Can we focus here?
Let's focus.
All right.
Shorting.
Short selling with TradeZero. I see Steven backstage and I don't see Dan. That's okay though. I think Steven. I think we're going to start without Dan. Steven, is that cool? What say you? Yeah, he's cool with it too.
Oh, and the players?
He's cool with it too. All right, let's start. This is Zero Hassle Short Selling with TradeZero. Steven Johnson, what's up, man? How we doing?
Hello, chaps. How's it going?
I don't know where Dan is. Do you know where Dan is?
I can send him a text and see where he is. Just 1 second. But I think he'll be trying to get on, but he might have some tech issue.
Is what I said accurate though? Were you getting down and dirty in INDO?
I was certainly getting dirty. But it was a rough and tumble kind of stock. So basically, let's just kind of break down what's happened with this sector. While Dan gets on. So
yeah.
Russia, I mean, unless you've been living under a rock, you know that there's some conflict between Russia and Ukraine.
Yeah.
But as a result of the conflict, it's led to some instability in the oil and gas market. And the microcap world doesn't need much to start developing some momentum and some, volatility. So when the instability about the prices of oil was occurring and the prices of oil were going up, it immediately causes an effect in the small cap world where these micro cap stocks then have a reason to run, because if a commodity has a high price, if there's a small cap stock related to that commodity, it's a valid reason for it to shoot and for it to run.
Yeah, microcap plus low float plus like macro news. In this case, like the oil market is doing some funky things. Is creating like a perfect storm recipe. So let me actually bring up a chart, Dan, of INDO. Can you walk us through like sort of what you did or did not do here? Because obviously, there's two schools of thought, right? And give me a second to bring up my chart. There's two schools of thought. There's a school of thought that looks at that chart of INDO and says, "Oh, I'm going to chase this puppy. I am going to hop on this train as well and make some money on the long side." Then there's the other side that says, "No, there is no way that this is sustainable. This has to come back down. I'm going to short this guy." Both schools of thought are right and both are wrong, depending on, it's all about your timing, right? So can you tell us about how you played this, if at all?
I can tell you the safest way to play it, because like many shorts, I mean, the January and February markets was so slow, and everyone was looking to try and make money, or everyone's trying to make money. Oh, here's Dan. We'll let him on.
Hey, Dan.
Sorry, guys. So sorry.
Oh, good.
Go ahead, Steve. I'm enjoying the commentary.
Yeah, so I mean, across January and February, the market's been really slow. You've got a lot of traders who are used to coming off a very hot market last year, and they're ready to make money. A lot of big short sellers are ready to make money, and it's like if for example, with a dog, if you don't feed a dog for a couple of weeks and then you give him a chicken, he's going to eat all the chicken as fast as he can, and it's kind of the same thing with like shorts. We're very hungry, and as soon as we see some volatility, we jump on it. But the problem with that is that if you're too aggressive, like many shorts are, it tends to all the shorts who shorted early then have to cover, and it creates this explosive volatility, this explosive move to the upside, which is exactly what happened with the likes of INDO, IMPP, HUSA. We saw it runs as high as 1,600% in a day, or over 2 days, like HUSA, 1 to 16.
It's madness, but and it's illogical. But it doesn't mean that you need to be the person to come in and short this, because the person shorting this at 5 or 6 or 7 or 10, and I'm on HUSA now, they took heat up to $16. So how do you go about attacking this?
Hey, we're talking in hindsight, right? So hindsight trading is really easy.
It's easy.
It's very difficult to, after you've been starved of plays across January and February, it's very difficult to not want to put the foot down on a play like this, because when HUSA, it's up 200%, it's up 300%, it's up 400%, it's up 500%. A lot of short sellers are going to think, it's up so much, the top must be in. But it's the number one rule of short selling is it's up too much isn't a reason to go short. Like, you have to look for more than that. So some of the good indicators of a better short sell trade or safer entry points would be a massive overextension, but that's not enough. You need, like, for example, B, the volume drying up. Do you see how the volume's much lower on the day of the first red day compared to the previous day?
Yes.
You see that significant drop? It's a key sign that the momentum in the stock has dropped, and without the high volume of buyers, the stock's more likely to fall. But we don't just want a lot of momentum. We generally need a huge green day or 2 huge green days. And then if you get a big gap up or a big gap down, a big gap down the next day signifies a change in momentum. A big gap up leads people to take profits, which can help turn the stock into a first red day. So with HUSA, we had the crazy green day, but then that's not a day to short. It's too front side. But once you get the huge gap up and you get the fade in volume, it's a better entry. There's no perfect entry. Trading's really hard, but it's safer. INDO I thought was easier. If you want to flip to INDO, INDO is the same kind of thing, right? We got the 2 really big green days. Then we got the drop in volume. On the day of the short, and we didn't get so much a gap up. But I think INDO was better because with INDO, do you see the big wick on the daily on the green day? The green day before the red day.
Yep.
That really big week is to say like that. It tried to go into the 70s and 80s and it got rejected. And then if you go into like a 10 or a 15 minute chart,
I can do that.
And you just scroll back a little bit to see the full move. So if you look at it, we had the crazy move. Do you see that really weak close on the final day where it was really green? Yeah, on March 22nd, it ripped all the way up into the 80s. But you see how it couldn't hold the 80s? It really sold off to the end of the day.
Yep.
So that's kind of a sign that it can also be over, because even the next day on the first red day, you've got resistance to short into. So you've got resistance from the prior day to short into. So you're not just shorting like 52-week highs and new intraday highs. You've got an overextended move. Then you've got the fade in volume, and you've got something to short into. And it's kind of picture perfect that it runs into that previous day resistance.
And actually, this is interesting too. On what this is on the 22nd, right? March. No, this is what I was saying. This is on the 8th. I think this, you can see this pre-market rally that started at 8 a.m. And if I'm not mistaken, there's a decent number of retail brokers that come online, meaning they enable pre-market trading beginning at 8 a.m. So from 8 a.m. to 9 a.m., you have a very nice rally here, but it couldn't even hold all those gains until the open. It couldn't even hold it for the last half hour of the pre-market session. Then, of course, you went straight down from there. But that's interesting. I think that 8 to 9 hour, you have this rally where you sort of tried and then you got rejected up in that whatever $80 area twice actually. And I think that was when to read some. I don't know. I'm not saying who. I think a number of retail brokers, though. I think they come on online at 8 a.m. for pre-market trading, and you saw some people sort of maybe get faked out there, but the action for the prior day was the better indicator.
Yeah, and just one more thing that I kind of took away recently, with these overextended stocks, like when it's up 200%, it's overextended, but some of these stocks can be overextended by 1,500%. I think the key for me is generally there's often like a major player in the stock, right? There's someone with this. There's someone, they, that, them. There's someone who kind of can be controlling the stock. And generally, when the move's over, they'll dump it, and that when they dump their position, that's when the move's over. But they'll only dump it when they can dump it into the most liquidity possible, which is generally in the morning. So if a stock is holding up between 9:30, 10, 10:15, often it can mean that it's got legs to go higher, because it's when the people with the most money are wanting to dump. That's why like if you look at INDO, HUSA, IMPP, they all dumped in the morning. They all collapsed before 10 a.m., 10:15. It's because the people with the most money, who probably know the most about what's going on with the stocks, they all sell at the same time into the heavy morning liquidity. So if the stock's holding by 10:30, it's probably going higher.
And so you're saying that these people, they looked at the close from the 7th. They were like, oh boy, oh crap, we got to get out of here.
Bit of a weak close.
So, yeah, they saw the weak close and they were like, all right, that we had our fun, we're done. And that's what, and then it becomes a waterfall effect, right? Or a domino effect, right? Where things selling leads to more selling. And that's a really good, two really good lessons here, right? He watched the volume, and he also watched the close on the last green day. You can see it on the daily chart and on the 15-minute chart there. So really, really good stuff there. I'm wondering, Dan, in the last few days here, there's been a number of these, high-flying short squeezes. Have any of them become hard to borrow? Has that contributed to this at all?
Yeah, they have. So INDO is one of them. IMPP. I think today there is ENSV is another one. So a lot of these energy stocks that have popped since the start of the war, Ukraine, Russia, energy's been on the rise, as everyone knows, hitting numbers we haven't seen in quite some time. And I think, due to the fact that there were a lot of shorts trying to capitalize on the downside post the rally, where a lot of the folks who were long the stock, who may have loaned it out, were then all of a sudden selling their shares because of the rising in those prices, thus causing brokers who borrowed the stock to get fails to deliver on those, because shares they thought they were going to be able to borrow have now been sold. And so once a stock has 5 consecutive days of fails to deliver, the listing exchange will put it on what's called their threshold list, making the stock hard to borrow. Where if you want to short these stocks, you're actually not getting a locate anymore. You're getting what's called a pre-borrow, which is from a broker-dealer standpoint, a locate gives us a reasonable basis to believe that we can get the shares on settlement if you borrow them, if you take them overnight. Where a pre-borrow, we actually know that we have the shares in-house, so we don't have that risk of a fail to deliver on those. It gives us a much more definitive course of action as it relates to keep filling those short orders, and then allowing folks who want to stay short up until they want to cover.
It's interesting how that behind-the-scenes stuff plays out in the price action.
Yeah, it's all related. It is. And you think about from your own standpoint, if you were long INDO 2 weeks ago and you just, it's doing its thing, and, next thing you know, it's up exponentially, your inclination, depending on where you got in, obviously, would maybe to sell. And if your stocks were on deposit in a margin account, the clearing firm that you have that's custodying those assets has the right and ability to loan those shares out, whether you want them to or not. It's part of the margin agreement. And when that happens, if you sell it, the shares that were loaned out now to either be resourced or they need to be covered.
And I'm sure it doesn't help things. And let's look this up right now. It doesn't help the fact that the float here is what? Oh, 2.26 million shares. There's not a lot of shares to go around.
That definitely exacerbates things both up, on the up and downside, because of the limited supply.
IMPP and HUSA as well, like 8 million floats, all low floats.
Yeah,
Some smart people are doing this. There's some smart people with a lot of money thinking, there's a war in Russia and Ukraine. Oil prices are going higher. What low floats might we be able to buy that we can push up? Like, smart people are thinking about this ahead of time.
For sure. Awesome. So, was there anything else either of you wanted to add on just shorting low float rocket ships like this? I think Steven's strategy is pretty good. He definitely is not coming in on day one or even day two or even day three. He's waiting for those two things. He's waiting for that volume to dry up. He's waiting for maybe a weak close or some kind of a candle to indicate that there is that we couldn't hold gains. Steven, do you have anything that you want to add on just shorting these rocket ships?
Nah, just those who run the fastest will only finish first. So if you be too aggressive and you short too fast, you're just going to blow. So just wait. Patience is the game in this game.
That's those. What was it saying? Those who run the fastest often finish first.
Whoever runs the fastest only finishes first.
Never heard that before, but it makes sense. All right. So what I've done, guys, is I've gone through our prior segments that we've done here, and I've pulled together a couple of what I thought were some of the more salient points. And I wanted to replay a couple of them right now and see A, if anyone in the chat has any questions about it, and B, if anyone has anything more to add. We talked about a share, what really happens behind the scenes when a stock is easy to borrow and not easy to borrow. And everything that Dan just said was also explained visually in a segment a few months ago. I want to play that if I can right now, and I hope you guys will be able to hear it.
Okay, so if it's not easy, then a locate is required. So if a locate's required, the customer, the trader using our platform would put in the symbol, would interact with our locate window, and put in the symbol, number of shares, hit the button. We're going to come back with a rate if we have availability. If the trader accepts that rate, now these shares are allocated to his account that he can then short cover as many times as he'd like. So looking at the chart here, once the client accepts the locate from the broker, then they will have access to be able to short up to that number of shares as many times as they'd like.
Steven, have you experienced?
The reason I brought that up is because I liked the visualization there. I liked the visual explainer of what actually the step-by-step process of what happens behind the scenes. So I'm going to stitch, by the way, I'm going to stitch all these segments together and upload them in one video. So we're going to have it all in one place, but so you don't miss anything. But did anyone have any thoughts on that, or Dan, anything more to add? You've kind of already hit on that today even. I didn't know we were
on the hard to borrow. Yeah, just it's basically easy or hard. If it's hard, it goes through the process that we just illustrated. From the trader's perspective and TradeZero customer's perspective, their interaction with the locates window or the short window, we kind of do the heavy lifting behind the scenes. We're aware of what stocks are on the threshold list in the morning. Everyone is. You can go look these up and Google them. And so what we're doing is we're getting ahead of pre-borrowing when people are asking and getting allocations of shares on the pre-borrow side so that when customers come in and they want to short a stock that happens to be threshold and hard to borrow, that we've already done the legwork to put those shares in. So they know that regardless of what they take down from our shortlist window, whether it be a locate or a pre-borrow, they have the ability to recycle those by short covering, because we're doing kind of the legwork behind the scenes to ensure if a pre-borrow is required, that's what we're loading into the system. If it's just a locate, that's what we have available.
I have another clip I want to play now. This is a clip of Steven elaborating more on volume and what is like high volume or low volume. What does that really mean to have high or low volume? Steven explained this in a little bit more detail in a clip a couple weeks ago. I want to play that right now.
Like in this example, the stock is gapped up. Do you see how I can't see exactly, but like the stock closed maybe in the 2s and it opened in the 3s, so or the 4s. So if a stock has a gap overnight, say it has news overnight, it needs volume to sustain the gap. But if it trades only 20 million in volume, that for me is not enough volume. It needs to trade like 150, 200 million. So if we go to the next example, you can see that if a stock makes a big gap up, but it doesn't have the volume to sustain, it doesn't have the demand, it doesn't have the attention to sustain, it will give back. So this is a short indicator. But for example, if we look at this chart, it didn't trade 20 million on the day, it traded 275 million on the day. And that 275 million volume day was the precursor to an outrageously insane move where the stock went from 2 to 44, which is like an insane move. It's outrageous. It's a short seller's nightmare. But it's not a short seller's nightmare if you can read the indicators, if you can see the precursors to a big move. And it's the most basic one. The stock market is governed on supply versus demand. And if you look for shorts with not a lot of demand, like the previous example, and you can recognize a short that is not a good short, it's a better long because it has a lot of demand.
Yeah.
It's the first step to being a good trader.
What is a lot of volume? 20 million shares is not a lot of volume, Stephen, to you. 250, 300 million shares, that's a lot of volume.
It's all relevant, but I just want to quickly touch on the last point from the previous example.
Sure.
Look, trading is incredibly difficult. It's incredibly difficult. So don't make it harder by choosing a broker that doesn't let you short sell. Just it's really easy. It's like a really easy thing to find a broker that lets you have options to short sell. Because if you don't have an option that lets you short sell, you only have access to half the opportunities in the market. And if you're trading micro caps, the best opportunities, in my opinion, are to the short side. So just don't make it harder than it has to be. That's one thing. But in relation to the volume, the way I see volume with these micro cap stocks, a lot of them are micro cap stocks because the not very good companies are the companies that were $20, $30, $40, $50 companies that are now $1, $2, $3, $4, $5 companies because the price has come down, and it's come down because no one values them, and no one values them because they're bad. Now, if these companies push up and have big moves to the upside, it's like a hot air balloon. Like if a hot air balloon goes really high, but it runs out of fuel, it's going to crash and burn. And if a bad micro cap stock runs really high and it runs out of volume or suppliers, it's also going to crash and burn. So when the demand or the fuel to keep the move going higher stops or becomes insufficient, the balloon's going to burst and snap and crash, and people are going to not die, but lose money unless they sell.
For sure. All right, there was a ton more good stuff that I would have loved to highlight here, but we don't have the time today. So what I'm going to do, as I said, is stitch all these segments together into one long video. I will upload it, I will share it, I will tweet it, I will put it on MySpace. I'll do all that stuff. Dan Pipitone is the CEO of TradeZero. Steven Johnson is a trader. And guys, if you want to learn more, that link that's been scrolling at the bottom of the screen, that takes you to an information page, benzinga.com/go/TradeZero-YouTube. It's up on the screen. It's been scrolling on the screen for the last 20 minutes. That's where you can learn more. TradeZero, obviously, the reason we did this with them as opposed to anyone else is because they're a broker that specializes in short selling. So Dan, Steven, it has been an absolute pleasure. I cannot wait to do this again, have you back on the show. Steven, stay safe out there, man. I know it's tough. It's tough at times. Stay safe. Dan, keep on keeping on. Can't wait to have you back on again soon.
Likewise, Spencer. Thanks for the time and the opportunity to share some of our story with you guys. I really appreciate it.
Guys, smash the like for Steven and Dan. That's amazing. How often do you get to hear directly from the CEO of a major retail broker? Not very often. I mean, on this show you do. That's kind of the point, right? So, okay, I want to transition here from short selling to a different area of the market right now. Our next guest is having, I'm going to say one of his best, or maybe best isn't the right word, one of his busiest few weeks in a long time. Sal Gilbertie, he is with Teucrium Trading, and he launched years ago a number of agricultural-based ETFs. And the amount of money that has just flooded into these things in the last few weeks is really kind of astounding. I'm talking corn, wheat, soybeans, sugar, and then there's a different fund that combines all that stuff. So let's bring Sal on the show. I really want to get his perspective on what exactly has gone on in commodities land in the last couple of weeks right now. Sal, welcome to the show. Oh no, you're on mute though. Can you just on the bottom there on the screen? There should be a.
There we go. How's that? Glad to be here. Thanks.
It was my description a fair assessment? Has this been one of the busier periods for in your career?
It's been the busiest in Teucrium's history, that's for sure. So we're 11 years old. We've had these ETFs for about 11 years. We've been telling people that grains are as important as energy in your portfolio, and you know, until there's a crisis, people don't pay much attention. They go to whatever's in the headline, and now grains are in the headline.
That is certainly true. So what is it like to be on the other end of this, where as you said, you've started these years and years ago, and a lot of ETFs don't get a lot of attention, right? You know, the sexy ones of any given day tend to get the lion's share of the attention of both in the media, but also in terms of flows. And what is it like to be on the other end of this and to just see I don't know the up-to-date numbers, maybe you do, just the amount of money, the inflows that you've taken in the last couple weeks across the board?
I don't know the total. I know that Friday we took in, I think, 190 million, and understand this. We were a firm that a month ago had 250 million total under management. So the money just flooded completely in. People, it's interesting because grains flatline. I think as you know, farmers around the world are subsidized, so they're used to producing things. Grains trade at their cost of production until there's a crisis, and so you go for many years, as did grains, where say corn was trading at around $3.50 to $4 a bushel for 7.5 years. And that's the time when smart people layered it into their portfolios. We think in the move up from 2020 to 2021, a couple $100 million was made in our funds by people holding our funds. They bought lows. We saw the selling come in, but now there's another, if you will, looming. I don't want to call it a crisis, but 30% of the world's wheat exports. So most countries don't grow their own food; they buy it in, and a few big countries actually grow the food and sell it. And so one of the top exporters in the world is Russia. The other is Ukraine. And when you combine them, they are the top exporter in the world by far. They provide about 30% of the exportable wheat in the world, and that wheat's not going to be exported right now. So people panicked. They saw there was a wheat fund finally. Most people didn't know that, and in the money came. So I think what most people don't understand though is that an ETF is a package. It holds something inside of it, and what our ETFs hold inside of them is futures, and futures are really difficult to trade. We don't use leverage. If $1 million comes into our fund, we buy $1 million of, say, wheat, if wheat's on the screen. So that's what we do, $1 million notional value. And leverage in futures is pretty high. It can be 10 to 1 or 20 to 1, whereas we don't do that. If it's a 10 to 1 leverage, we put 10 cents down, we get you $1 worth of wheat, and we take your other 90 cents and earn interest with it. That also goes into the fund. So that's what happens. People need to understand that inside of most commodity ETFs, futures-based commodity ETFs, which ours are, you're going to get the same volatility, if not more, of the underlying futures, because that's what's moving the price. The ETF package is really unique. When you buy an ETF, you're buying what's inside of the ETF. The ETF is just a vehicle allowing you to buy what's inside of it.
So can you explain, and I believe I saw the other day that Teucrium had you'd halted creations, is that right, on wheat?
Right, and that it turns out it wasn't really relevant to investors. I mean, the rules were so in the old days.
Well, first, can you explain what that means though, to halt creations?
Sure. Yeah. In the old days, so the whole ETF industry kind of fit into the securities laws because the ETF industry evolved really quickly. So when a company does an IPO, they think they're worth $100 million. They want to sell 10 million shares for $10. There's their 100 million value. Okay. Yep. An ETF doesn't do that. An ETF takes whatever money it's got in it, if it's only $1, and it invests it in the underlying. In our case, let's just say wheat. We own $1 worth of wheat. And if more money comes in, it doesn't make the price go up because we just issue more shares. Yep. And we simply take that money and buy wheat. And if the price of wheat goes up, because that's what's inside the ETF, then the price of the ETF goes up. That's how all ETFs work. And so in the old days, and I mean pre-August of last year, you had to file for a certain number of shares under the old IPO rules. And I'm simplifying this, okay? The regulations are much more complex. But in the new ETF rules were passed in August that said the next time you file your prospectus, you'll have an infinite number of shares. You can issue as many shares as you want. You don't have to ask permission beforehand, and we basically book entry at the end of the year. Tell us what you did at the end of the year. So that was a really big improvement, much needed in the funds. We'd never experienced inflows like this. No one really pays attention to wheat, and so I think we registered for an enormous number of shares last year. We filed every April, and there's a cost involved. There's a cost and an effort. You have to do an accounting audit. You have to get a tax opinion from an attorney. It's kind of a complicated process.
Okay.
So we normally do that every April 1st. When Russia attacked, we had plenty of shares. We had an immense amount of shares outstanding. I don't know off the top of my head, but it was 20 or 30 million shares were ready to be issued, just sitting there. And suddenly Russia attacked. That's more than enough shares in our entire 11-year history to have. But Russia attacked. Everybody paid attention to wheat.
It wasn't enough for the.
It wasn't enough. Now, what we did in a week, what it generally takes a couple of months to do, and applied for new shares on March the 4th. So Russia attacked on the 24th of February. We applied for new shares on March the 4th, and we actually were approved yesterday for the infinite number of shares. Now, I need to make this really clear. Just because there weren't creates, the market still traded tens of millions of shares after we made that announcement. The New York Stock Exchange, by its rules, if you have if you issue a press release with a material event, they must halt trading, and they did. And they halted trading for something between 15 and 30 minutes. They started again. Wheat traded. The bid-ask spread stayed really tight, penny to 4 pennies wide. Basically, when we look back after the trading halt was over, and the market knew we weren't making creates, because it was really irrelevant to people buying and selling the shares, because the market makers had so many shares anyway and were buying and selling them. There was plenty of liquidity. There was no price dislocation.
Okay.
Our price did, this is important, our price did trade at a premium to what the NAV was, but so the net asset value is calculated against the last futures price, which is what we hold. But futures were trading at their limit. They weren't allowed to trade as high as the market said they should be trading, but the wheat did. So actually the wheat fund actually was more efficient than futures and actually showed people the true price of wheat futures. It kept trading.
This is the, and it's a little bit like nitty gritty here, but this is the interesting part of ETFs. And to your point, there are moments in time like you just explained, where if the underlying futures market is not trading, there can still be price discovery. There can still be a market because we have a derivative like an ETF out there. In your case, now some other times the price will delineate from the net asset value in a bad way, and then sort of creates this weird arbitrage situation where the ETF doesn't represent the NAV of the underlying, and there's a disconnect. But in this case, because wheat futures were halted, your fund was not halted. It kept on trading. It provided a window into that market, provided a market where there was none, which is
correct. And it did. So the market makers who are trading futures against our fund, because that's what our fund holds. Okay.
Right.
They find the synthetic price, because the front month of wheat, the spot month, the real price of wheat, the price of wheat that's going to turn into real wheat in the futures market, that doesn't have limits. And so when the other months lock limits, the market makers trade the front month, and then they figure out the spreads, and they know what the value of what we hold, even though it's lock limit, would actually be, and they price our wheat spread.
How do they? Maybe you're not the person to ask. How do they do that?
Well, they do that on the futures market. That you don't,
Okay.
ETF investors don't need to know that. So,
Okay. I know.
yeah,
I'm interested.
that
This
happens
is getting way into the weeds here.
Yeah,
Okay.
Yeah, that happens on futures. So suffice it to say, the smartest people in the world who trade our funds and make markets in our funds so that investors can buy and sell our ETFs, they had no interruption in flow. The bid-ask spread stayed tight, and our wheat ETF reflected the price of basically really wheat futures if they didn't have their limits.
Okay, question from the chat here. The question from the chat here: are there any rollover issues with wheat, or I'll even make it more broad? Any rollover issues as it pertains to wheat, corn, sugar, or soybeans, as we've seen before with the oil markets?
Great question, and the same issues are there, but they vary in degree. And so when there's a squeeze, we sell the futures that we have to sell that are about to expire to buy other ones, so that we don't end up with wheat right? We don't take delivery of wheat.
That'd be fun.
And, in this case, there's a shortage. The front months are higher than the back. We're selling for a higher price and buying for a cheaper price. That over time helps. In normal markets, and commodities normally trade this way, it's called the cost of carry. If you buy a bushel of wheat, you have to store it, and it costs you, say, a nickel a month. So that's what your erosion is going to be. That's what happens in these futures-based funds. You don't know whether there's going to be the carry market, which is commonly known as contango, or the backwardated market, which we're in now on that chart, where we're selling higher than we're buying and we're placing for. The reason we design our funds, they don't just hold one contract, they hold across the curve, they hold multiple contracts, because we never know if you're going to have a situation that hurts the fund or helps the fund. And so we try to mitigate that. And you can't get rid of it completely. Yes, it's an issue for all futures-based funds. Bloomberg's written several articles on our soybean fund saying it's the poster child for how well a well-designed ETF can work. Hey, we can't predict it. We did our best. That's a risk of trading futures-based ETFs.
This number may not be totally accurate, but I use a tool to look at ETF fund flows, and I'm seeing over the last 4 weeks you've taken in more than $400 million in flows into.
We probably have. I don't have the numbers in front of me.
Wheat, corn, SOYB, cane, and then the tags TAGS, which is all of them. I get it's a fascinating look into like the intricacies of the ETF market structure. I'm like kind of a nerd about this stuff, so I think this is cool. But congratulations! I mean, you've been here the whole time, and when things hit the fan, you're there waiting, and the products worked, man. They worked as designed. That's a major victory, not just for you, but for like ETFs at large.
That's correct.
It's a victory.
That's correct. Yes, it is. And it proved the ETF structure works as designed. And these, we're lucky because wheat's so liquid underneath, it trades multi-billions of notional value inside, inside those futures markets every week. But absolutely, it worked flawlessly. And we're proud of the products, and we're glad we were there to help investors. I mean, there's a lot of volatility. It's really dangerous. I'm sure a lot of money was made and a lot of money was lost in our funds. But we just provide them so people can do what they think best. That's our job.
Sal Gilbertie, the CEO of Teucrium Trading. Sal, thank you so much for coming on Benzinga Live today.
Always great to be here.
All right, now the good one. I mean, it's frankly incredible when you have, as Sal himself said, I don't know what their AUM was coming into this mess, but it's quadrupled. I don't know, quintupled. I don't know. Some crazy number like that. I mean, in terms of just people, investors, traders piling in, because there aren't. It's not like there's 10 different firms out there that have soybean ETFs, right? There's not. There's like one. It's his. He was there. And sometimes it's all about timing and being in the right place at the right time. And you saw this happen. You see this happen all the time with ETFs. Like the first cybersecurity ETF was launched a few months. But remember the Sony hack?
Yep.
The first cybersecurity ETF was launched like a few months before the Sony hack. And everyone's like, oh no. Cybersecurity is a thing.
That's actually interesting. I'm doing some research on the hacker group Anonymous.
Oh, you're doing some research on Anonymous?
Yeah.
This will surely end well. Tell me more. I can't wait to hear about this.
It's actually a well-kept secret that the cybersecurity space loves Anonymous because they're so high profile, and they'll make their anytime Anonymous targets or whatever, it's just such high profile cyber hacks that the cybersecurity companies are like, see, Anonymous, this is why you need us. And so they actually are big fans of Anonymous. But wait, real quick, because I know we've got a lot of things to get through in the last 20 minutes of the show. We're bringing McDressy Kaylor on. Yesterday, Spencer, we said this. Yesterday was the anniversary of the Mark Haynes bottom.
Yeah.
Do you know what the anniversary of today is?
I do. Okay. I actually know this.
All right. Well, I'm gonna ask the chat. So 22 years ago today.
What?
That should give you a hint. 22 years.
What new thing? Okay, 22 years. I'll give you another hint. It's related to the conversation we just had to some extent. What new thing was launched in the market 22 years ago?
Oh, wait. I think we're thinking of different things.
23 years ago is what I'm thinking about. 1999.
Okay. Was when what? NASDAQ was launched?
NASDAQ? No. NASDAQ was launched in the 70s.
What was launched in 1999?
The QQQs.
Okay.
The second ETF ever launched was launched on this day in 1999. I want to say.
Well, mine.
Yeah, Mo says Clippy.
Oh no.
That's it, man.
Wait, I might have just lost it.
I don't know. We Jesse, we see you here. 1 second, man. We got a lot going on right now.
All right, hold on. I gotta try to find this tweet.
Okay, you find the tweet. Here's what's supposed to happen. I see your comment.
I found it.
I see your comment. Mountain Tactical in the chat. Check out the link I just put in there. The first ETF
was Spy.
Was Spy, which was launched. I want to say in 1993, I think.
Well, interesting that the Qs were launched exactly a year before this date, which I'm about to reference.
Oh, I don't know what you're talking.
A year after that,
what
in
are you
2000. On this date in 2000, the Nasdaq reached its .com bubble peak of $5,400 before plunging over 75%.
Is that supposed to be like a sell indicator right now, or what?
No, it's just interesting that yesterday was the anniversary of the Haynes bottom. Today's the anniversary of the .com peak.
Oh,
so I guess bottom line is this time, March 9th, March 10th is just historically been a very pivotal time. Pivotal, pun intended.
It's interesting that you bring this up about March, because October is also there are a lot of anniversaries in October. Like Black Monday, Black Tuesday, Black Thursday, right? There are a lot of like historical events happening in October in the market. And this may be a stretch here, but October and March are also the two best sports months of the year. You got all the sports happening during October and March. Is that a coincidence?
I don't know. I don't know if there's been any studies about it. Maybe you'll have to.
Can someone look into this correlation, please?
You'll have to be the first. I don't know. I don't think so. I'm going to go out and say I don't think any correlation.
Okay, I'm going to go ahead and say maybe.
October, I will say though, month before November, where elections are typically held. Maybe there's some correlation there.
Maybe.
Okay, so election or October during election years.
We have Jesse Kaylor here. Jesse, we're going to bring you on, but we're only going to bring you on if you want to play Wordle with us, because we arranged we were going to do trivia today, but it was kind of last minute, so we're going to do Wordle instead. Do you want to play Wordle with us, Jesse?
Yes? What's the Wordle?
Well, we don't know. We made our own Wordle, and we're going to play it right now.
I was
saying
like, what's the word? But what's up?
Oh, that's fair. So let's bring up the Wordle right now, guys, and after the Wordle, we will get to the stocks that Jesse has on his radar. So if you don't know what this is, we're going to bring it up on the screen right now. You get, 6 guesses to guess the word.
I hate that light.
These are all stock market related words. And I think we have several different rounds here. And the person that gets them the fastest will give you some free Benzinga swag. Can we start this? Whoever is producing the show, do we have a producer for the show?
Who's working today?
No one's working today.
Is it Happy?
Can I? Dude,
this might be. Wait, what did the guy say? He said,
"All right,
this could be the last time you see me wearing this headset." There's a deep trap ball to left field.
That was Tom Brenneman.
Yeah.
Wait a minute. That's your neck of the woods, Jesse.
Yeah, Ohio,
Cincinnati.
Yeah,
Mr.
Cincinnati. Okay.
Nick Castellano. Are you a big Castellanos guy?
We don't have a producer here, so I don't know about that word.
Wait, I just saw. Oh no, Jesse! No, I got baited into these queues on the 5-minute. Oh no!
What did you do?
I bought. I thought we were reversing, but now I'm seeing a double top and we're coming back down. Give me some good news, Jesse. Tell me why I should be bullish right now.
You should be bullish because there's plenty of trading opportunities on small time frame charts right now. But long term, it's been the same story, I think, coming out of every guy's mouth that wants a simple answer: buy a little bit at a time, hold for long term, blah blah blah. But at the end of the day, the positive news for me has been I've been actually trading very well. Things have been the same as since last time we talked, keeping things very minimal tight stop losses. And I played what is the one Agra today? ARGI with Ryan Flynn in your guys' live chat. Was it what is it?
I don't know. Okay, TBD on the Wordle, guys. If we do Wordle, great. If we don't, we'll do it tomorrow.
AgriForce. Yeah, I posted it in the live chat when they were doing it this morning. and I had the stop loss at 119 and got in. And I got only 50% profit and got out really fast. But then I looked later on and saw this move. I was like, oh, I only missed out on about $3 more, $2 more bucks. But it was a nice little trade. But we got the kids yelling in the background like always. I only got one today. We'll let her in.
Speaking of kids in the background,
I started my vacation today with the family.
Speaking of kids in the background, did you hear the news about Elon Musk?
Yes, I did not. What?
Elon Musk. So this is actually pretty funny. So Grimes, right? Elon Musk's partner or whatever. Grimes was giving an interview for a Vanity Fair cover story, and she invited the reporter to her home for the interview. And the reporter kept hearing a baby crying upstairs and was like, do you have another kid? And she was like, yes. So Elon Musk had another child and they named it Y. Well, that's not the name, but that's what they're calling it, Y. Elon Musk has a second kid and they use a surrogate so they could keep it from the public, but that's pretty funny, I thought.
Is he going to create like superhumans?
Maybe.
And he's starting with X and Y and Z. No,
yeah.
I'm just kidding.
Yeah.
Kidding.
No, it was pretty funny though. It's like they try to keep this kid a secret from the public. I get that. And then you invite a reporter over to your house, and the baby was screaming.
Like, you couldn't have kept him quiet for 5 minutes or 20 minutes.
Don't invite a reporter over to your house if you want to keep your kid a secret, I guess, is the takeaway of this story here. But anyway, let's bring the charts back up. Sorry. So what's up with Apple?
Oh wait, Jesse, we just got a big. Oh yeah, we can see it on Apple too. Are we on the 5 minute right here?
Yeah.
Yeah, we
see
got this on the
see my
Qs
buy
too.
signal in the blue and the red. That would be where it says buy on this line, sell on here. So it was already predetermined. Look at that. It was going to happen.
Wow.
Boom. There it goes. There you go. Your stops right here at this blue.
Did something just happen? Hold on.
I don't know. The Qs in the 5 minute candle were up like about almost 0.4%, almost 0.5%.
White House says Venezuela release of detainees was not in exchange for sanctions relief or oil. Yo, I bet you oil just. Hold on. I can't. Let me bring up my charts right now. All right, Jesse, I'm going to mute you for 1 second, man.
You're fine. Yeah, sorry.
All right, I'm going to mute him for 1 second. Because we got to pay attention here. So oil. Oh, no reaction to that though. Where's my chart? No reaction to the XLE. Let's go to the USO.
No, yeah, oil hasn't made the move.
No reaction to that, and yet the whole market just popped.
Well,
everything else just popped.
Well, I mean, they said that it wasn't like a direct exchange. It doesn't mean that it's not part of a bigger picture of us trying to make better relations with Venezuela. I don't know. Maybe it's just all coincidental. Who knows? Who knows? Q's coming back down a little bit right now. I mean, if we can stay above.
ARKK didn't go.
Really. Let me share.
How's Amazon doing? Yep. New high of the day. Almost a new high of the day in Amazon.
Let me share this. Okay, so right here, this level, you can see we're right where we hit previous resistance here and came down. If we can clear this level and stay north of here, we'll call it 330. If we can break up to 330, then intraday, and we're looking, by the way, this is a 5 minute candle, 5 minute candles on the Qs. Then we're looking like we could have a strong afternoon. If we can't get past here, oh, here we go. As I'm talking,
what do you mean if? We just did.
I know. So as I'm saying, we got to hold up here. Hold. Tesla getting obliterated? Really? While the market, maybe not in the last. Oh wow, Tesla is down 5% today. What was there news on Tesla?
Well, Tesla was always down today.
I know, but all right, I'm in my Benzinga Pro.
All of tech is down today, guys.
Yeah, but Tesla's down 5%. The Qs aren't.
Yeah,
down
5%. but look at tech and look at the EV trade. That's not what I want to do. Look at NEO. Okay, NEO just ripped yesterday. It's giving it all back today, and then some. Look at this EV trade. Look at solar. Look at solar. They're just giving back yesterday's gains or the gains in the past few days. There's no news here. It's just profits unwinding, right? I want to bring up what stock did I just want to bring up? Shoot. It wasn't Tesla, it wasn't Amazon. Oh, I wanted to bring up ARKW. You know why? Because it's getting creamed today, right? Down 5%, 4.5%. I didn't realize this. So you guys know I bought ARKW a while ago. I'm officially in the red on my ARK position. For whatever reason, I thought that I'd bought it earlier, but I guess I didn't. I guess I bought it. I bought it months after I thought I did, because my cost basis is $80. For some reason I thought I bought it at 60. I don't know why I thought that. So I bought it at 80. So after going from 80 to $200, 191, whatever, I am now back. I've given back all of those gains. I'm in the red on my ARK W. Ouch for me. Not fun.
Sorry about that, guys. Like always.
All good.
But
all good.
You know, life of trading. If the people out there watching this show, we know you got kids in the background too while you trade sometimes, so you can't get away from them all the time. But
yeah, sorry,
anyway.
Jesse, you're actually not allowed to talk.
I know, right? Sorry. You're not allowed to have a show with you guys ever.
What's on your radar, Jesse?
Just been looking at the Apple trade.
I'm putting your screen back up.
Shorting Snap has been a trade. On the last few days, you've been getting a lot of good opportunities. I think this thing's going to break down again. I thought it would, but that's about all I had. But she's not giving me the time of day today to even help you guys out today, so I will jump off before she interrupts me again. But Snap on the short was one that I wanted to go over with you guys. I think it's going to go down and retest and get down into the upper 20s again, 26, 27 area. And then also looking at Apple to get back up above 160 in the next couple of weeks. So maybe even today, hopefully, on Apple. So
got it. All right, Jesse, Kaylor, if you guys want to check them out more, check out Elite Trading. We'll drop that. Our link should be.
Where's the link?
Where's the link?
I can put it in the chat or in the private chat here.
Beautiful. All right,
but
Jesse.
You guys can put that in. I think, guys, you guys got to get me in during the mornings when these kids aren't around.
All right, we'll do it,
guys. All right,
peace.
Yep.
All right. Turns out, whoops, sorry, Jesse. So, turns out we actually do have time for some Wordle if our producers are here, but they're gone. So we don't have anyone man on the controls.
We could also pull up the.
Oh, we do. We need to do a crypto update. We need to do crypto.
Are we allowed to, if we pulled up the stream of the basketball game, played it while we were also on the box and like gave our own commentary? I think we're allowed to do that.
I would rather not. Oh, here's the link for Jesse's Discord. I'm gonna put it in the chat right now. I would rather not do that because I really don't want to get.
Yeah, we've already had enough plagiarism issues for the day.
What is this we thing? You keep saying you keep saying we. More like you. Anyway,
we're all implicated, Spencer.
Not all implicated. You know what? I've never said this before, but I'm going to say it now. I cannot speak for the rest of this company. Okay. I can't speak for the rest of this company. I don't know what else. I can only control what I can control. I think that applies to everyone else here. Let's do a crypto update. We haven't looked at the heat map once today. What's that about? Let's do it. All right, give me a minute here to bring it up. Bring up my heat map because my computer is being slow. Such is life on a laptop. Yeah. All right. Yeah. Remember yesterday? Remember how it was all green? Yeah. Not so much today. Who's leading us down? Adam Finance down. I always joke about that. Cosmos down 8.5%. What do we have here? Bitcoin Cash down 7.6%. FTX token down 5.3%. Bitcoin down 6.76%. Solana down 5.5%. Yeah, I don't know, guys. I don't understand it because yesterday's news appeared to be fundamentally driven. This does not give you confidence. You can't even hold those gains for one day. You can't even hold gains for one day. You're gonna give back that rally the very next day. Does not make you feel great. Whoa, pop up. Does not make you feel great. So I don't know. I'm still buying. I'm still dollar cost averaging in is what I'm doing, and I don't intend to change that strategy. If you guys want some free Bitcoin, check out Voyager. Open an account there using the offer code ZING, ZING. Fund your account with $100. Make a trade, and they will send you $50 in free Bitcoin. There is no better kind of Bitcoin than the free kind of Bitcoin. So, hey, I just saw Michigan lost.
To who?
Indiana. That's exciting.
Wait, really?
Yeah, Duke's gonna win. Whoever mentioned Duke losing, you got my hopes up for nothing. So, thanks for that. Is there anything we didn't get to? Oh man, I wanted to talk about this yesterday. Barry Diller. Did you guys see this? Barry Diller. If you don't know who that is, he's a billionaire. He's the CEO of IAC. They also own Match.com or Match Group, which owns Tinder. He's a billionaire. He's worth like $4.5 billion. He's being investigated by the SEC for suspiciously well-timed call option buys of Activision Blizzard ahead of the announcement that they were being acquired by Microsoft. And the reason I thought that was interesting is because according to I think I saw it in the Wall Street Journal, and according to them, I think his paper profits, because he hasn't sold yet, but his paper profits were like $60 million, I think. He's a guy who's worth $4 billion, and he apparently decided, nah, that's not enough for me. I need a little bit more. Why, man? That's sad to me. If you're worth $4 billion, why are you buying call options on Activision on anything? On anything? I don't get it, man. I guess that's why I'm not a billionaire. Because I don't get it. Christian, that's funny. Yeah, Enver, sorry, man. We'll get the wordle up tomorrow. It's just, I know it's old news. I said I forgot to bring this up yesterday.
Also, Jesse, we might have a few minutes tomorrow. We can get you on. We'll let you know if not. Yeah.
I just think that's like so messed up, man. I don't know. I saw that and I was just like, why? You know what I mean?
Yeah, I mean, you hear that all the time about the ultra wealthy, right? That how much money you make or how much money you have is directly correlated to your quality of life and happiness. True. No, to an extent. Like it's correlated like up until, once you start making a certain amount, say you're making 500,000, making $1 million a year versus 500,000 isn't going to make, any more any happy, your life any better, whatever.
Yeah.
You can still afford your house and your second home at that point. But it's just you want more and more and more. 1 billion isn't enough. Then 2 billion isn't enough. Then 3 billion isn't enough.
Maybe it's because I'm reading that book, The Psychology of Money. So this is top of mind for me right now. But I don't know, man. Just whatever. Let's just check it on Amazon before we go. 24-1 stock split effective as of the close on June 3rd. Yeah, I think what's the record date, guy? Let me look up the record date right now. The record date, if you want, for whatever reason, if you want to watch your Amazon shares get chopped in bits of 20, then you need to own Amazon by May 27th.
Am I wrong, guys? I feel like everyone's making the story out to be and the price action out to be about the stock split, whereas I see the buyback being a bigger deal.
No, don't totally disagree.
But hear me out.
It's $10 billion. You know what Amazon's market cap is?
Okay, but hear me out.
It's 1.4 trillion.
The stock split, and Warren Buffett says this, it doesn't fundamentally do anything for the company or for share price, right? It's the same if you have one share worth $3,000 or 20 shares worth $150. It's the exact same.
Yeah.
What's different with the buyback is there's actually a value add to shareholders that you're limiting the supply of shares, thus making the value of them go higher. I'm not saying that I'm not saying that the stock price or the stock split doesn't have a positive impact on the. Obviously, it does. What I'm saying is, from a logical standpoint, the buyback is the one out of the two that actually has a tangible increase in value.
Yeah, but it's so small though. It's 10 billion. And Bob Pisani had a good tweet about this morning. He noted that he was looking at Amazon's shares outstanding or the float, I forget which, since the last stock split 20 years ago, and Amazon has steadily increased its float over the last 20 years. So the buyback is a drop in the bucket here.
$10 billion sounds like a lot.
It's a drop in the bucket.
Sounds
it's a drop in the bucket. Drop in the bucket.
10 billion isn't a drop in the bucket to me.
It is. It's a drop in the bucket for Amazon. It's a $1.4 trillion company. Whatever. We have to wrap because we've been on for 2.5 hours and it's time to go. So thanks to our guests today. Thanks to Jesse Kaylor. Thanks to Sal Gilbertie. Thanks to Dan and Steven from TradeZero. Thanks to Hot Stocks, Luke Jacobi. Did I miss anyone?
Jesse Kaylor.
I said that.
I don't know.
I don't think
Sal?
I missed anyone. No, I got Sal.
Pipitone.
I got everyone. All right. Smash that like button. Once again, guys, we are a month and a half out now from the Benzinga Cannabis Capital Conference. Go to bzcannabis.com to learn more. Discount code is shows30. Check out Benzinga Pro. It's amazing. It's free for everyone for 2 weeks. pro.benzinga.com. If you want a discount code for that, that's also in the description of this video. Just click on that 25% off code. The link is right there. I guess that's it. Smash the like. Do whatever it is you're going to do. Stay green. And is the roadmap going live today? I don't actually see the roadmap on our YouTube. I'm not sure what's going on there.
The redirect.
All right, I now I see him. All right, the roadmap is going live. So we're done. We're gonna end now and redirect you over to the roadmap, and I'll be back for at the close at 3:30. Everyone have a great rest of your day.
Woo! Happy trading. Stay green.
And who's ending this show? Am I? Are you?
I can.